Welcome back to the European market open. A minute to go into the start of cash equity trading, and here are your headlines. Growth concerns, futures look for direction after a choppy session in the U.S. The fast-spreading Delta variant continues to weigh on the recovery as U.S. COVID deaths hit levels not seen since February. Reports say China's top legislative body delays a vote on an anti-sanctions law in Hong Kong. Shares in Asia slide as China's regulatory curbs sap demand. And more pain from the chip crunch. A new report says the global shortages will cut auto production by as much as 7.1 million cars this year. So let's take a look at the futures, everyone. And this is what we're seeing across the board. We did see a bit of a sell-off in Asia. Our Mark Cudmore was telling us, of course, those losses have paired as we went into the market close over in Asia. Now, it's filtering through a little bit, or certain sectors are down in the European trading session. Futures just seconds ago, we're actually pointing to a higher start. This is what we're seeing at the open. So as things actually start moving around, let's look at the IBEX. You can see the FTSE 100 between 0.1 and higher and lower. So again, I guess they're still trying to figure out exactly what happens next. There's more and more concern about economic growth. There's concern about China's regulatory curbs hurting sentiment. The dollar, though, firm, and commodities trimming a weekly drop. Overall, the other couple of things that we're watching out for, look for the Italian-German spread, and you can see the French also 2-year a little bit on the move. Pound at 136.18 against the dollar. So European equity markets are opening slightly higher, but really not huge moves as a fast-spreading Delta virus strain stokes concerns about economic growth. Now, Asian stocks have tumbled after China's regulatory curbs also hurt sentiment. Well, joining us now is William Porter, Credit Suisse Securities Head of European Credit Strategy. William, great to speak to you today, especially on a Friday. We've had quite a week on the markets. Is it the beginning of something? Is it a small correction? Is it just August?
Well, Francine, you lead with the difficult question. So I'll lead with the answer, which is I think it is just August, but this is a very nervy time of the year, and you get moves being exaggerated by thin liquidity, but September is a notoriously dangerous month, and we can talk about why that is the case. So people are on edge. I think on balance, this is just the absorption of news into thin markets. I'm reasonably positive on COVID. Perhaps we can talk about that. But yes, clearly people are nervous. It's been a rough week, and nothing is certain. But I think on balance, this is just part of summer volatility, of the beginning of an autumn sell-off.
William, what do you think markets are nervous about? Is it really the Delta variant? It feels like the Delta variant has been here for a while. And we always knew that certain economies, especially if you have a zero COVID policy, were going to stop and start. Is there something else that's worrying them right now?
Well, I think a couple of the headlines out of China have got markets spooked. And this is happening at a time where, you can put an interpretation on the Fed that it's just, damn the torpedoes, full speed ahead anyway, that you can interpret the minutes as saying that they're going to taper regardless. I think that actually you have to look at this pretty subtly. You're absolutely right. There is stop-start in some of the countries that have approached COVID a little differently. I think the US is on course for continued reopening. I think the UK, which has always been a little bit the laboratory experiment, is showing the way forward in a highly vaccinated population. It is rapidly returning to normal with the help of vaccines and low morbidity. So effectively, you're disrupting the supply side of the economy, the global economy, and not the demand side. And that's going to create its own issues over time. So I think the Fed is the really awkward layer over the COVID analysis at this point.
Yeah, I was going to ask you actually about the Fed and how you see that developing. Like, what will policymakers do to deal with the inflation and this talk of tapering?
Well, I take a slightly irreverent view of central banks because, you know me, I tend to look at things, slightly game-wise, and I look at incentive structures. If we get a chance to throw up a 40-year history of US yields, we'll see that they peaked almost exactly 40 years ago. And it's been a pretty steady bull trend ever since. So the people who've taken it on in last year or so, as the recovery trade has started, have not got history on their side. And I think it's worth remembering that the last third, really since about 2007, 2008, of that global run, and it is a global run, it's just best illustrated in the States, you don't have the euro to worry about and so on, but that global run, the last third of it has happened with rates effectively at the zero bound. Now, my view of the incentive structure, and they said this, is that central banks, particularly the Fed, want off zero bound. If they succeed, fixed income investing is going to look very different to anything we've been used to for the last 13 years. And I think that really is the $64,000 question at this point.
William, thanks so much. William Porter there, Credit Suisse Securities, Head of European Credit Strategy. We'll talk a lot more about some of his thoughts. Coming up this hour, we'll also be speaking to Tom Harrison, the Chief Executive of the England and Wales Cricket Board. This summer has been the successful launch of the 100 new franchised league in the UK. It's basically a short way of looking at cricket compared to the longer matches. So we'll look at the success of that and how they can roll it out further. This is Bloomberg.
Up this week on Bloomberg Green, it's meat, but not as you know it. From plant-based to slaughter-free, we'll look at the innovation hitting your dinner table.
If a meat replacement is truly going to be a replacement, then the company that's making it needs to make more than just burgers and sausages.
And it's not just meat, but seafood too. We'll look at the startup growing shrimp and crab in a lab to make food more ethical and environmentally friendly.
Our mission is to feed the 10 billion that we will be in the next couple of decades.
Plus, turning your beer green. We're not talking St. Patrick's Day, but the plans from Heineken and BrewDog to make the drinks industry more sustainable.
We are part of the race to zero. We are the first global brewer to make a commitment to fully decarbonize by 2040.
I'm Kaylee Lyons in New York, and catch Bloomberg Green this weekend on TV, Quick Take, and online.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We believe that the worst is past.
It is very fluid.
The chip shortage is going to run well into 2022.
The chip shortage is also, which is driven by the capacity. Already the actions has been taken by our suppliers, and this will also go away.
Microchips are the center of most of this activity, but we're seeing a wide range of supplier disruptions due largely to continued outbreak of COVID.
We do think we'll probably be into at least mid-22 until we start to see supplies rebound.
Whether this will go away in short term, I don't think so.
We've seen shortages of somewhere between 5, 10 to 20% maximum production compared to our initial plans.
Top automakers and analysts there on the chip shortage. So we are 10 minutes into the European trading day, and let's take a look at what's also moving on the markets as these equity markets broadly are looking for direction. Of course, three things they're looking at: not only the chip shortage, they're looking at the Delta variant, growth concerns, and of course inflation. But onto these individual stocks, which I have to say today are pretty exciting. First of all, Clayton, Dubious and Rice are actually raising their offer for Morrison Supermarkets to £7 billion in a bid to outmaneuver Fortress Group in a battle for Britain's fourth largest grocer. So you can see the fourth largest grocer, Morrison, gaining some 4.5% in today's trading session. The other one, and this is also an exciting one because we seem to have quite encouraging news from the retail sector in the UK today, is Marks and Spencer. Now today, out of the blue, they actually raised their profit forecast after some pretty strong sales in both food and clothing in stores since they reopened following months of lockdown at the beginning of the year. Marks and Spencer gaining some 9.6%. And finally, something that actually I was a little bit less familiar with, but it is a Norway Royal Salmon, the biggest gainer in today's trading session, gaining 13%. And actually, SalMar has offered to buy this company with a premium. It's a 12.5% premium compared to the closing price, and you can see that sent these shares actually soaring. Now let's get back to our guest with his top calls in the credit space. William Porter, Credit Suisse Securities, Head of European Credit Strategy, is still with us. William, thank you so much for sticking with us. Let me just back it up a little bit and first of all ask you what you think is being underestimated in the market right now.
Well, Francine, that takes me back to the central banks and very interesting dynamic that's opened up. These are apolitical entities. Lagarde has made it very explicit she wants to stay out of politics, but Powell wants to be renominated, and I think we've all eyes, which means pretty well everyone watching, has spent my entire career in a period where broadly the central banks have been friendly towards profit growth, and where they've tolerated, because it meant downward pressure on inflation, an increasing share of the economy going to profits and less by construction to labor. I think that's changing, and I think the biggest single long-term ticking time bomb out there is the fact that the central banks are currently perceived as the market's friends, and I think that relationship is going to change slightly. I think they're going to tolerate much higher levels of wage growth than the market is going to. And that therefore, as we exit this process, and we will, a darker side to this central banking that we have got used to, and by the way, the 40-year uptrend in corporate profits that we've got used to, darker side will emerge in my view. And I don't think the market's thinking about that at all. I think they're thinking much shorter term about Jackson Hole and the like.
And so, William, what does that mean actually on how you construct a portfolio or where you see value in credit?
Well, it means for us, I can kind of sit pretty comfortably at the moment because it means that the central banks are going to continue, I think, until the economy, wages and inflation are running hotter than the equity markets are comfortable with. And the way they're going to do that is by continuing to buy assets, I think, beyond the expected expiry date. There's already, as you know, an active discussion in the ECB about how effectively to rename the PEPP. You mentioned Italy, Germany. Christine Lagarde, after a misstep in March last year, has shown she is the boss of the Italy-Germany spread. She's taken on the market, she's taken on the hawks, and she does now, following through on Draghi of whatever many years ago it is, 9 years ago, doing whatever it takes to stabilize that. And that is actually good news for credit and perhaps less good news for equities. Meanwhile, as I said, the market has tried to take on the tail end of this bull run and is getting into trouble because you're a $120 billion hedge fund. You go out, you put your entire portfolio short treasuries, and you wait, to get rich. Meanwhile, your neighbor down the street, next month, the Fed calls them and puts them in the same position, and you get caught. So I think, to be honest, credit, high yield credits, bank capital, for reasons we can discuss maybe in a moment, look particularly attractive still, even as perhaps risk appetite is going to deteriorate in the equity markets.
What kind of bank capital?
Well, we took a view that the banking systems were nationalized in the early part of this crisis, de facto, of course, not de jure. We've talked about Italy, Germany. So peripheral AT1 on which you get paid a handsome yield. If you're default risk-free, across the capital structure of Italy and its banking system, then don't get paid 100 basis points for being in the sovereign. Get paid several hundred basis points for being down in the AT1. And, happy days. And I just don't think that those trades are near their expiry date, even as we go into September the 9th and September the 22nd, let alone the 28th of August Jackson Hole Day.
William, thank you so much. William Porter there, Credit Suisse Securities Head of European Credit Strategy. Now let's get straight to the Bloomberg Business Flash. Here's Angel Feliciano. Hi, Angel.
Hi, Francine. The U.S. Federal Trade Commission has refiled its monopoly lawsuit against Facebook. It alleges the social network pursued a strategy to buy or bury rivals to suppress competition. The suit asks the court to unwind Facebook's acquisitions of Instagram and WhatsApp. Facebook says the takeovers were lawful and were reviewed and cleared many years ago. CD&R has raised its offer for supermarket Morrisons to £7 billion. The aim is to outmaneuver Fortress Group in the battle for Britain's fourth largest grocer. The U.S. private equity firm has pledged to support Morrisons' existing management team, its relationships with suppliers, as well as staff pay and pensions. China Telecom has surged above its offer price as the world's biggest listing so far this year debuted in Shanghai. Gains resumed after a trading halt, indicating enthusiasm for China's push to build the world's largest 5G networks and monetize the high-speed technology behind them. Rival China Mobile is also seeking a secondary listing in Shanghai. And OnlyFans is getting out of the pornography business. From October, the company will prohibit sexually explicit conduct on its website, although some nude photos and videos will still be allowed. OnlyFans has attracted more than 130 million users, its popularity increasing during the pandemic as sex workers, musicians, and online influencers use it to charge fans for exclusive content. And that's your Bloomberg Business Flash. Francine?
Angel, thank you so much. Angel Feliciano here in London. Now, coming up, Angela Merkel heads to Moscow in what will be her last meeting with Vladimir Putin as chancellor. Discussions will include developments in Afghanistan, so we'll get the latest from Berlin. This is Bloomberg.
Sem se apresentar, as escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo Minuto Nascimento, vamos levar a música aonde o povo está.
Minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem para os amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open, 20 minutes into the European trading day, and you can see equities still looking for direction. So we did have a fallout because of technology in Asia. The DAX, the CAC between 0.1 and 0.3% lower, and I guess the FTSE is the only one actually holding to a little bit of gains. Across the board, we have some encouraging news, for example, with M&S and Morrison, but actually overall there's still a lot of concern about growth and what that means, of course, for valuations. Now, for more, we're also joined from Berlin by Bloomberg's Maria Tadeo. We look at Germany with our biggest story, Angela Merkel speaking last time as Chancellor with, of course, Mr. Vladimir Putin. Now, what will come up is refugees from Afghanistan, and there's a lot, of course, of talk after the week that we've had in terms of foreign affairs. So let's get straight to Maria Tadeo now with the very latest. Maria, if you look at the crisis with refugees, how will Angela Merkel actually deal with this when talking also with Vladimir Putin, who's a kind of conduit maybe between the two regions?
Yes, and Francine, that's a very good point, because until now, Angela Merkel is a person that has been or has served as a bridge between Russia and the European Union, being someone who grew up in East Germany, who knows the country well, who also speaks the language. She's had very direct contact with Vladimir Putin. Now, the refugee story will feature, I would argue, and I would say that a lot of the political analysts that I've been speaking to in the past few days actually say that we won't see a repeat of 2015 because Europe will pay up front this time, and a lot of services and directions have already taken place in the border to stop that from happening this time around. The second issue that will feature highly, of course, is what to do with the Taliban. The German government is really scrambling and rushing now to get their personnel out of the country. We know they're removing their embassy for the time being. There's no clear sense of direction as to whether or not they will recognize a potential regime coming out of the country. The Russians, however, they say they stay put and they will keep their personnel in the country. And then the second issue, which always features very highly when it comes to Russia, is what to do with the Nord Stream pipeline. That is a conversation that will also come up in that meeting. We know that the Germans have said we will go ahead with the construction, but they have also pledged that they will help Ukraine over any potential moves from Russia, but also the money, the revenue, Francine, that they will lose from transit fees as a result of the Nord Stream pipeline too. So that is something that will feature very much still on the agenda. The energy conversation is a perennial issue when it comes to Germany and Russia.
It certainly is. Maria, of course, we're looking at an important general election in Germany in September. How will the refugee crisis, how will Afghanistan change the game?
Well, it could to some extent, to the extent that the CDU, the Christian Democrats, Angela Merkel's party, they have said that they want to avoid this repeat of the 2015 chaos. We have seen, however, the Greens yesterday when I was on the campaign trail with Annalena Baerbock, she was much more progressive on that, saying we have a duty to protect these people. But the election at this stage is very much about the SPD and Olaf Scholz climbing in popularity week after week. He's added 7 points, Francine, in the space of a week, when you ask Germans, who do you trust to be the best chancellor, they'll tell you 40% of them, it will be Olaf Scholz. So it's now not so much about the topics, but it's about the people. And this is new for German elections, because until now, just like in many other places of Europe, it was really about the party politics, not the person. In the dynamics we see in polls, it is very much about the candidate and the polling in terms of the popularity of each individual person.
Yeah, Maria, thanks so much. Maria Tadeo there in Berlin. Now, for more on the developments in Afghanistan, we're also joined by Bloomberg's Ruth Pollard. Ruth, how's the situation evolving on the ground for women?
Well, women are very worried about what the future holds. We already know in some parts of the country, women and girls are being prevented from going to school and university. Women have been told not to show up for jobs, and in some parts they've even been told they can't leave the house without a male escort. You know, before the Taliban even took control of the country, they were enforcing strict adherence to Sharia in the districts that they held, often forcing girls to stop going to school once they hit puberty. But I would say it's not just women who are worried, men too. Anyone who works in businesses that the Taliban disapprove of are at risk, as are religious minorities.
Ruth, are there any signs of resistance to the Taliban building across the country?
Yes, in the past couple of days, we've seen, particularly in the eastern provinces and a little bit in the capital, Kabul, people have started a resistance movement. They've taken the Afghan flag and they've been climbing up the flagpoles in their towns and replacing the Taliban flag with it. And continuing on from a movement that started a couple of weeks ago, they've been chanting Allahu Akbar, which means God is great. And then they're sort of reclaiming that phrase from the Taliban. And of course, in the city of Jalalabad, we saw footage of the Taliban shooting at protesters. So, you know, it remains to be seen whether the Taliban stick to their, you know, kinder, gentler approach. But certainly we're seeing some crackdowns on protests in the provinces in the last couple of days.
So, Ruth, could we also, you know, see a humanitarian crisis?
Yeah, I mean, the longer the situation on the ground remains unstable, and for now it is very unstable, the worse the humanitarian crisis will get. Before these latest developments, nearly 250,000 Afghans had been forced to flee their homes ahead of the Taliban advance across the country before the end of May, and 80% of those are women and children. You've now got tens of thousands sleeping in parks and on the streets of Kabul. So, and of course, there's a drought occurring in some parts of Afghanistan. So all of this is going to lead to a much worsening situation. People are going to start running out of cash soon. They're going to not have the ability to buy food and fuel. So it feels like it's only going to get worse from here.
Ruth, thank you so much. Bloomberg's Ruth Pollard there joining us today on Afghanistan. Now, coming up, New Zealand's central bank governor gives the clearest indication yet that policymakers plan to raise the official cash rate at their next meeting, even if there are still cases of COVID-19 in the community. We'll hear from Adrian Orr next. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open, 30 minutes into the European trading day. The focus is on a lot of these European stocks. We're now actually seeing in the last couple of minutes a reversal. So if you look at overall, the stocks Europe 600 down some 0.3%, an extra bit of pressure on the DAX, which is now losing 0.6%, and similar losses for the CAC 40. Again, there's probably a move into the technology stocks, so let's check the groups that are moving the most. Technology, I'm sure, is right after we saw the tech rout over in Asia. The other thing we need to watch out for is, of course, any kind of indication of the vaccine uptake around the world, and of course, what happens with global growth. So if you look at auto parts, travel and leisure, chemicals, basic resources, there are ones that are bid the less today. The virus strain, Delta, we've been talking about it for a couple of weeks, but it does seem that on August, or this week in August, it definitely stoked concerns about economic growth, and China's regulatory curbs also hurt sentiment. Now let's get straight to the Bloomberg. First word news with Angel Feliciano. Hi, Angel.
Hi, Francine. Sydney's 2-month-long lockdown is to be extended until at least the end of September as Australia's Delta outbreak worsens. New Zealand, meanwhile, has extended its nationwide lockdown by 4 days after an outbreak spread beyond the largest city, Auckland, placing pressure on the so-called zero-COVID strategy. China has taken the next step in taming big tech. Lawmakers have passed legislation setting out tougher rules for how companies handle user data. No details of the new law were immediately released, but earlier drafts required firms to get customer consent to collect, use, and share information. U.S. Vice President Kamala Harris will look to bolster economic and military cooperation in China's backyard as she visits Singapore and Vietnam starting this weekend. It's the Biden administration's highest profile trip yet to the region. Harris's trip to Vietnam will be the first by a sitting U.S. vice president since the war ended in 1975. And the U.S. Federal Trade Commission has refiled its monopoly lawsuit against Facebook. It alleges the social network pursued a strategy to buy or bury rivals to suppress competition. The suit asked the court to unwind Facebook's acquisitions of Instagram and WhatsApp. Facebook says the takeovers were lawful and reviewed and cleared many years ago. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine?
So much, Angel Feliciano in London. Now, the RBNZ's decision to delay an expected rate hike has rippled through markets, sparking concern that the COVID Delta variant will force other central banks to shift their own timelines. Earlier, we spoke with Governor Adrian Orr, who says the hike may now happen in October.
We have to focus very much on our purpose, which is, of course, the inflation and employment mandate that we have. And, absolutely this week was not the best of timing to be looking to reduce interest rates, given reduce the monetary stimulus, I should say, given the health situation. But, time is on our hand. We can observe what is going on, and the underlying economics remains the same. We have significant capacity constraints. We have one-off price spikes. We have rolling supply disruption, creating the costs. We are above maximum sustainable employment. So the underlying situation remains the same. But we thought best, let's just observe over the next few days at little cost to us.
Well, you brought up an interesting concept, I thought, at the press conference a couple of days ago when you talked about a strategy of permanent flexibility, the need for the central bank to manage its way through a virus environment, knowing it's going to come and go. Does that mean that you could potentially hike the key rate, maybe even in October, even if there's still instances here and there of outbreaks and targeted lockdowns?
I think it does. I mean, the real issue is at what extent is monetary policy being useful. I mean, the single largest lesson we've had globally is that it's government fiscal policy that is most impactful to manage this type of crisis. It's a structural crisis. It's not a cyclical behaviour. We've seen governments step in and bolster household balance sheets, business balance sheets incredibly effectively. And so that puts monetary policy in a useful but very secondary role. And we need to just be true to our mandate, which is to say, are inflation pressures rising? Are we at or above maximum sustainable employment? And hence, should we be back more at a neutral interest rate? What would change that view? Well, you would have to see a significant shock to demand. What we've learned through time is that incomes remain strong, demand bounces back very quickly, and that these rolling lockdowns will continue for a while. So that flexibility, remain focused on the medium-term target.
Well, I hope all those investors and traders who you know, kind of control the market expectations for rate changes are listening closely, because market expectations for an October hike, which had been much, much higher, maybe close to 100, are down to 59%. Maybe that's, first of all, because you skipped this rate hike in the midst of that sudden lockdown in New Zealand because of this surge outbreak, or the case outbreak, but also maybe because it's not going to be a monetary policy statement meeting where you typically would make a rate change. It's a monetary policy review meeting. Now, it's true, you announced the end of your long-term security asset purchases at a meeting just like that. But are you then saying that October is a live meeting regardless of any of this?
Of course, October is a live meeting. You know, we retain the right, but not the obligation to move policy when we think it's necessary. We can communicate in many different ways. Our monetary policy statement released this week outlines very clearly our views on what the neutral interest rate is, where we see the capacity pressures, how we see inflation performing. And, you know, we have the official cash rate back at neutral over next year, the course of next year, which is 2% compared to 0.25 now. What would push us off that course? We would have to be very convinced that the supply side has suddenly been able to respond, removing inflation pressures, or the demand side for the economy has had a significant turnaround. And that would mean fiscal policy is not doing its job.
That was the RBNZ Governor Adrian Orr speaking with Bloomberg's Kathleen Hayes. Now, coming up, we're speaking to Tom Harrison, the Chief Executive of the England and Wales Cricket Board. This summer has seen the successful launch of the 100, a new franchised league in the UK. That's coming up next, and this is Bloomberg.
We talk about those NPLs. Will they stay high?
As all of you are very fully aware that the second COVID wave hit India hard and hit India suddenly. So obviously, I would say almost 50 days of the quarter were impacted in a very significant manner. And that has come through on the retail portfolio side. So while all the banks and financial institutions saw higher than expected retail slippages during the quarter, but we do believe it is transitory. We expect moderation in the second half of the year. We've already seen positive trends come through in the second half of June, and July has been much better than June, and I think the same trend has continued in August also. The demand resolution, which was 98%, is already reached 99.5%, or what I would say pre-COVID levels. There is a 26% year-on-year recovery, improvement in recovery.
This is Venezuela, a country that has suffered one of the greatest economic and humanitarian crises in modern history. Today, it appears Nicolás Maduro and his government are prepared to negotiate an agreement that might end U.S. sanctions and pave the way for free and fair elections.
Hopefully, we can find paths of closeness, of respect.
Join Bloomberg Television for a special report, Inside Venezuela, Friday at 7.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
We believe that the worst is past.
It is very fluid.
The chip shortage is going to run well into 2022.
The chip shortage is also, which is driven by the capacity. Already the actions has been taken by our suppliers, and this will also go away.
Microchips are the center of most of this activity, but we're seeing a wide range of supplier disruptions due largely to continued outbreak of COVID.
We do think we'll probably be into at least mid-22 until we start to see supplies rebound.
Whether this will go away in short term, I don't think so.
We've seen shortages of somewhere between 5, 10 to 20% maximum production compared to our initial plans.
Well, top automakers and analysts there on the chip shortage. Now, that chip shortage is also filtering through some of the anxiousness that we've seen in the markets in the last 3 days. So we're 40 minutes into the European trading day, and you can see we're now firmly actually in the red with the European stock 600 down 0.5%, similar losses for the DAX and the CAC 40. I guess the FTSE is a little bit supported by some of these nice retail stocks, including M&S, but also Morrison, both getting a bid. Morrison, because it actually got a bid from private equity, M&S actually saying that they are forwarding, or that they're increasing some of their guidance because of some strong revenue since the UK reopened. Now let's get straight to the Bloomberg Business Flash. Here's Angel Feliciano. Hi, Angel.
Hi, Francine. CD&R has raised its offer for supermarket Morrison to £7 billion. The aim is to outmaneuver Fortress Group in the battle for Britain's fourth largest grocer. The U.S. private equity firm has pledged to support Morrison's existing management team, its relationship with suppliers, as well as staff pay and pensions. The new surge in U.S. coronavirus cases has prompted Apple to delay its return to corporate offices from October until January at the earliest. But the company says it does not expect to close offices or retail stores. Meanwhile, Charles Schwab is also delaying its return to office plans to no earlier than January. The U.S. Federal Trade Commission has refiled its monopoly lawsuit against Facebook. It alleges the social network pursued a strategy to buy or bury rivals to suppress competition. The suit asks the court to unwind Facebook's acquisitions of Instagram and WhatsApp. Facebook says the takeovers were lawful and were reviewed and cleared many years ago. And China Telecom has surged above its offer price as the world's biggest listing so far this year debuted in Shanghai. Gains resumed after a trading halt, indicating enthusiasm for China's push to build the world's largest 5G networks and monetize the high-speed technology behind them. Rival China Mobile is also seeking a secondary listing in Shanghai. OnlyFans is getting out of the pornography business. From October, the company will prohibit sexually explicit conduct on its website, although some nude photos and videos will still be allowed. OnlyFans has attracted more than 130 million users, its popularity increasing during the pandemic as sex workers, musicians, and online influencers use it to charge fans for exclusive content. And that's your Bloomberg Business Flash. Francine?
Angel, thanks so much. Angel Feliciano there in London. Now, British cricket has entered a new era this summer with the launch of the 100. The new franchised league is aiming to expand the fan base and monetize the sport more effectively. Now, the experiment seems to be working. More than 1 million people are expected to watch the tournament's final tomorrow. Well, joining us now is Tom Harrison. He's the chief executive of the England and Wales Cricket Board. Tom, thank you so much for joining us. So how has the 100 helped cricket, and how will it help it further in the future?
Well, the 100 is designed to grow cricket in this country. It's something that we've been working on for a long time now, for 3 or 4 years. But really, It's about making sure that the research that we've done about why more people aren't involved in cricket, why more people aren't coming into our grounds, those issues are being addressed. And the 100 is our response to that. It's a simpler form of the game. It's a more condensed form of the game, and it tries to pack the excitement that can take place over a 7-hour game or a 3-hour game into a shorter time period, which enables families and children to come into grounds in their droves and be excited by this wonderful sport.
So, Tom, have you been surprised by its success so far?
Not really. I think ultimately we've always believed that cricket as a sport is something which can galvanise people's attention. It's something which in the past has been accused of being complicated, and so what we've tried to do is simplify it. Effectively, it's the kind of decimalisation of cricket. It's 100 balls each side, so everyone can kind of understand what is going on, and it's all the excitement packed into a 2-hour window. So both for the men's tournament and the women's tournament, we've been delighted with the success, but I don't think surprised.
Okay, how much financial firepower, but also airtime on terrestrial TV do you need to go to, the next level?
Well, this will be probably one of 2 global tournaments that starts making a profit from year one. We will make between 10 and 13 million pounds in profit from year one, and the sky's the limit really for us to go forward. And we've got lots of options to take this product to the next level. Obviously, we've launched this in a COVID-impacted environment, and that's meant that a number of players from around the world that would have been taking part haven't been able to. But the opportunity for us to look at this in a different way from a commercial perspective, that option is on the table going forward, whether we want to look at third-party finance or whether we simply want to build it within the ecosystem of English cricket. These are the decisions that we'll be taking over the next 3 to 6 months.
So if the format you think, Tom, could actually be sold elsewhere in the world, where would you at first? And I mean, you're taking the decision in the next, I think, 6 months, I heard you say there.
Yeah.
I mean, is there anything actually against you taking it?
No, look, I mean, ultimately, the 100-ball cricket is there for people to enjoy all around the world. It's not, we have obviously licensed and protected the brand and the format and the playing conditions that go with it. And then we are in discussions with various leagues and bodies around the world about how this can be taken into other territories. What we're concentrating on here is taking the 100 and creating a global asset out of that property from which English cricket can benefit for generations to come. We're very reliant on the men's international game to fund the entire structure of cricket in this country. This helps us mitigate our reliance on that, and it's something that we control and we've built from scratch. So it's great news for stakeholders in the country in this part of the world and for fans all over the world.
How much money do you need actually to launch? I mean, do you have a ballpark figure, and are you speaking with investors and fundraisers?
Yeah, so our budget for this was £39 million. That's what we budgeted for this year. We're going to take income of well over 50 million for the competition this year. So we're already in a good situation. I think we can take that to new levels. We are going to look at whether investment is the right answer for us, a central investor, or whether it's something that we want to continue to control from the federation perspective. And that's a conversation that I'll be having with my board and our stakeholders over the course of the next. Once we've reviewed this, obviously the final is tomorrow, so we're not even through the competition yet. We've got a big month ahead of further international cricket, but come the end of this season, we'll sit down and review what has been a sensational season for cricket in this country.
Tom, does it just actually widen the fan base, or does it also attract new players?
Well, we hope, particularly in the women's game, right? I mean, we are making giant strides in the women's game in particular here, because women's game hasn't been a professional sport in this country for more than just for 2 years now. So at domestic level. So now we've added a whole tier of cricket for domestic for women in this country to further their skills. For the men, this is an addition to the program of cricket that we have in this country. And it's an exciting addition which enables our international players to, and want to be international players, to be on the big stage and show what they can do under intense pressure with the best players in the world. So, you know, for us, this is ticking boxes all over the show in terms of how we're trying to take cricket forward in this country, both for the men's and the women's game.
Tom, thank you so much. Tom Harrison, their Chief Executive of the England and Wales Cricket Board. Now, coming up, we talk a lot more about the markets. We talk about commodity currencies, look to be the biggest casualties of the flight to safety. We discuss that and more with Ven Ram from our Markets Live team. That's coming up next, and this is Bloomberg.
Valuations, particularly, you know, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the Open. We're 50 minutes into the European trading day, and you can see equities are actually lower. So they've accelerated their decline a touch, with stocks of Europe 600 down some 0.5%. So joining us is Ven Ram from our Markets Live team. Ven, thank you for joining us. So what's going on in the markets?
Morning, Francine. There's exciting things going on, all connected with the cricket that you talked about, and there is the other two C's being commodities and currencies. Now, look, I mean, there's a big divide in the markets. On the one side are commodities and currencies, which are being pretty volatile. And on the other side are bellwether rates led by U.S. Treasuries. And they haven't done much at all this week. In other words, there is intense selling in commodities and Chinese stocks, yes. But the key takeaway here is that there is no sign of any systemic global panic. And that's the big thing. Treasury 10-year rates haven't done much at all this week, while the traditional havens of the yen and the Swiss franc haven't seen humongous inflows in either. With the Bloomberg Commodity Index having run up almost 25% in the first 7 months through July, there was just too much money left on the table, with some of it inviting to be taken. And that's what we see happening. Obviously, you know, the China regulatory crackdown, the Delta variant, all those are reasons enough to do that. But the fact of the matter was that there was too much money waiting to be taken, left on the table. Francine?
Yeah, Ven, when you look at the commodities drop, right, and you kind of explain, you know, what it means for the wider markets in general. I mean, what do you make of the decision from the New Zealand Central Bank?
Well, I think it was an unfortunate coincidence that New Zealand reported one case of COVID just a day before the RBNZ's rate decision this week. Well, and for the markets, they had already priced in a rate hike. However, the RBNZ's decision to hold off at the last minute does raise a rather troubling question. If a lone case of COVID is enough to stop the central bank on its tracks, then are they right in the first place to embark on a hiking cycle? There can be no middle-of-the-road approach in monetary policy. Either you have a solid watertight case for a rate hike or none at all. And that's why I think the markets are a little bit circumspect now, even though we had Governor Orr saying on TV, Bloomberg TV, that, you know, October is a live meeting, but the markets are a little bit circumspect in pricing a full rate hike in October. Francine?
Ven, very quickly, I mean, if you look at some of the UK retail sales, what do they tell us about the strength of the UK?
Well, it was a bit of a disappointment because it punctures the narrative on pent-up spending. And we saw earlier this week, there was a dip in inflation for July, albeit the headline CPI, not so much the retail price inflation. So it allows, if anything, these data sets allow the Bank of England to breathe a bit easy on rates and definitely buys them time to do nothing at all, at least in the remainder of the year.
Ven, thank you so much. Ven Ram there for market perspective from our Markets Live team. And it's been really fun, Ven, speaking to you all week. Now, that's it for the European Market Open. Surveillance edition is up next. We'll have a full roundup of the markets. Again, tilting lower, actually quite significantly in the last 20 to 30 minutes. It all started in Asia. Then at the beginning of the trading session, markets seem to focus on some of the positives out there, maybe some of the earnings. Now, the rally is faltering. The dollar also on the move. China's regulatory curbs probably compounding risks that the Fed could be short of some kind of policy mistake. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that it was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You know, you can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
What were the numbers from the equities division? How well did it do?
Well, first 28% decrease as compared to a very, very good Q2 in 2020 is a good resilience, and it's a decrease that is much smaller than the one we have seen with some competitors.
We retain the right, but not the obligation to move policy when we think it's necessary.
But if they make a misstep, I think they are likely to tighten too late rather than too early.
I think this Jackson Hole is going to be very interesting.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. More pain from the chip crunch. A new report says global shortages will cut auto production by as much as 7.1 million cars this year. European car makers slump this morning. Reports say China's top legislative body unexpectedly delays a vote on anti-sanctions law in Hong Kong, while shares in Asia slide as China's regulatory curbs sap sentiment. Merkel in Moscow. The Russian-speaking German chancellor meets Putin for the last time to discuss Nord Stream and Afghanistan. Well, also quite a lot of market movements now because of the chip shortage, concerns also about regulation in China, and concerns overall about growth. We're seeing a down day once again for Europe. This is a third day straight. U.S. stock futures are also falling. The dollar extending a rally as faltering growth, but also China's regulatory curbs compounded risks before the Federal Reserve's Jackson Hole Symposium next week. Now, what I'm looking at is a lot of the commodity sell-off, and that's certainly one of the things that could reprice certain asset classes. European car makers also slumping this morning, according to a new report from IHS Markit. The worldwide shortage of semiconductors will cut global auto production by as many as 7.1 million cars this year. Now, that forecast doesn't include the latest cuts that Toyota announced yesterday.
We believe that the worst is past.
It is very fluid.
The chip shortage is going to run well into 2022.
The chip shortage is also, which is driven by the capacity. Already the actions has been taken by our suppliers, and this will also go away.
Microchips are the center of most of this activity, but we're seeing a wide range of supplier disruptions due largely to continued outbreak of COVID.
We do think we'll probably be into at least mid-22 until we start to see supplies rebound.
Whether this will go away in short term, I don't think so.
We've seen shortages of somewhere between 5, 10 to 20% maximum production compared to our initial plans.
Well, joining us now is our German business editor, Stefan Nicola. Thank you so much, Stefan, for joining us. So actually, from bad, could it get even worse?
Yeah, Francine, that's right, unfortunately. And one problem with all of this is the lack of visibility that all of these companies have. But many of them agree that it looks like it's getting worse before it gets better. And that is sort of a slight change from past predictions. There were hopes that this is all over by early next year, but it looks like the chip crisis will affect car makers and producing companies well into 2022 and, yeah, possibly into the second half even.
So, Stefan, what does it mean? I mean, is it because actually car makers significantly ramped up production as economies reopened that now they're hit by global chip supply, or is it just as levels that they were producing last year?
It's a combination of everything. We've talked about the chip crunch many times before, and sort of how lots of problematic developments have sort of combined to lead to that chip crunch. The problem is now that demand is really kicking back in, and car makers had expected this to go much smoother, but now, of course, the pandemic is kicking back in as well, and you see some of these disruption issues due to the COVID pandemic and the Delta variant resurging in some parts of Asia and Malaysia, for example, where chip production is curtailed. So, a lot of bad things are happening at once, and that's the unfortunate reason why we're still having this problem.
Yeah, thank you so much for joining us today. Bloomberg's German business editor, Stefan Nicola. Now, Chinese stocks have also tumbled as the country's tech crackdown moves into a new dimension. The administration has passed now legislation setting out tougher rules for how companies handle personal data. Firms will be required to obtain user consent over information collection and provide a way to opt out. Well, joining us now is our chief Asia economics correspondent, Enda Curran. Enda, I mean, this is part of the bigger crackdown. Like, how much more crackdowns and regulations are we going to see?
Well, it's another day and yet another set of sweeping regulations, Francine, as you mentioned. The particular points coming out of today is the fact that the government will limit kind of profiles that tech companies can keep on their users. And of course, they will also intervene in terms of what AI programs can recommend to customers. Now, you can say that's consumer safety, or you can say that's the government keeping control of big data. But either way, it all falls into a much bigger picture of what's going on in the background, which is that the government really is pushing through some house cleaning when it comes to China's economy. They are talking about enforcing laws and regulations on so many corners of the economy at the moment, not just technology, but we're talking about areas including healthcare, and they're even talking about, we saw that big crackdown on online education a few weeks ago. So there's no sign of this big sweeping crackdown is going to slow down anytime soon. The Communist Party government say it's necessary to create an economy that's fit for the future, but of course in the near term, markets are pretty nervous.
And any insight into why now?
Well, I guess there's a sense that there's no doubt that people are questioning the execution of all of this. I mean, it's both appears to be very hurried to outsiders, and certainly the implementation of it appears to be quite aggressive, as we saw with the online education sector that I mentioned a few weeks ago. It's coming thick and fast, and there seems to be no mercy being given to any securities caught in its wake. But at the same time, the party in China will say that this is all about alleviating the costs for families. It's about making a more productive workforce, ensuring that the workforce can grow and that thereby the economy can get on an even keel in the years ahead. So I think they're kind of accepting or girding for near-term pain and some near-term disruption, even if that's ups and downs in the markets. But longer term, they're saying this is going to drive some productivity dividends and bigger gains for the Chinese economy.
Thank you so much, Enda Curran there, our chief Asia economics correspondent. Now, as the U.S. CDC delays a decision on booster shots, health insurer Vitality hopes to drive vaccine uptake based on its incentive model. Later on this hour, we speak to the chief executive, Adrian Gore. Now, if you have any questions for him, just IB plus TV Go. This is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
The power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
Of course, October's a live meeting. You know, we retain the right, but not the obligation to move policy when we think it's necessary.
The RBNZ governor there, Adrian Orr, talking about what happened this week. Now let's get the latest on the markets. We're joined by Jeremy Stretch, head of G10 FX strategy at CIBC. Jeremy, thank you for joining us. Actually, we've had for a quiet August week, not at all quiet, given some of the currency moves and some of the moves.
Traders, good morning. It's time to place an order to sell short British pound. I'm looking to sell short at 136.227. If you follow my trades, 136.227. As you can see, we still hold 3 positions, 2 positions long on British pound and 1 position short. If this position will fill, it means we'll get into arbitrage. Okay? If you want to find out more about how we trade, how we make profit, you need to get the strategy. Please go to company.co.uk and you can get the strategy. Then practice a couple of weeks on our website through our streamer, and you can master your day trading skills. As you can see, position open, short position at 136.227. We are on arbitrage in British pound against United States dollar. Well done. I'll speak to you later, guys.
I mean, liquidity is evidently relatively thin, so I think that is amplifying some of the moves. So I think you always have to be careful about extrapolating what happens in terms of those thinner market episodes. But I think we are in an environment where the global growth numbers are proving to be challenged, and we're seeing a number of reasons and functions for that, not just purely COVID related, but some of the byproducts of that in terms of the weakness in terms of global supply chain. So I think we are seeing a moderation in activity levels, and I think that will prove to be troublesome for those that are driven by those pro-cyclical elements. But I think in the context of the US story, then there is still a reasonably constructive backdrop. If we are going to continue to see that labor market recovery ongoing, then I think the distinction between what's happening in the US and in terms of Fed policy with elsewhere, I think becomes relatively pronounced, and that's the reason for the dollar rally. But I'm not sure necessarily we're in a scenario yet when we should call off any hopes for that global recovery trade purely on the basis of the rising tide of Delta variant cases.
So, Jeremy, what are you expecting actually from Jackson Hole next week?
Well, I think the minutes set us up for the expectation of setting the scene for a tapering backdrop. Of course, before we get to that September FOMC, we also have another payrolls report, and if that is consistent with the retreat that we saw in claims yesterday over the payroll survey week, then I think next week should see Powell providing a template or an overview of the sort of the tapering bias or the tapering outlook. And I think that has been forestalled. Yeah, there's been forewarned by some of the other Fed members over the course of recent weeks. So I think Powell will be setting out the stall for tapering and allowing the market to see what the parameters are likely to be going forward. And so I think that in itself should continue to keep that dollar bid bias remaining in place.
Jeremy, we of course saw, and we started by hearing from the Central Bank of New Zealand, given what happened this week. Are we going to see more lockdown? I mean, this was one case, and actually New Zealand went to lockdown. I guess it was unfortunate timing that this happened the day before the decision. But how much are you focusing on some of these currencies that actually could move because of the zero policy COVID approach?
Well, absolutely. I think the suppression strategies that we've seen in place in terms of Australia and New Zealand initially proved to be very successful, but now become much more problematic, particularly as we're in a world where vaccination rates in general have moved up exponentially, and we're now seeing a sort of a different strategy being pursued. So it does leave Australia and New Zealand in a slightly difficult position in that particular context. Clearly, the timing, as you say, from New Zealand's perspective for the RBNZ was particularly troublesome with that one community case coming out the day before the decision. Clearly, Governor Orr has to say that each and every meeting remains live. But I think if we are going to see the perception of perpetuation of lockdowns in New Zealand, we've already seen that national lockdown extended slightly overnight, then the longer that lockdown scenario plays out and the greater the impact that that has on macroeconomic activities, then the greater the potential for rate hikes to be pushed out into the middle distance. And I think the RBA will clearly be much more comfortable with its own interest rate profile than perhaps someone in the market was suggesting a month or two ago, because, of course, that extension in New South Wales in terms of lockdown conditions will continue to constrain activity there. So it does suggest that the policy backdrops for those currencies which had been perceived to be nearer a tightening bias will prove to be compromised if their growth numbers are under pressure.
All right, Jeremy, thanks so much. Jeremy Stretch there, head of G10 FX strategy at CIBC. Now, also, just a couple of seconds ago, the Hang Seng index slumped some 20% from its February peak, which actually means that we're now entering a bear market. Now, let's get straight to the Bloomberg First Word News. Here's Angel Feliciano. Hi, Angel.
Hi, Francine. Sydney's 2-month-long lockdown is to be extended until at least the end of September as Australia's Delta outbreak worsens. New Zealand, meanwhile, has extended its nationwide lockdown by 4 days after an outbreak spread beyond the largest city, Auckland, placing pressure on the so-called zero-COVID strategy. China has taken the next step in taming big tech. Lawmakers have passed legislation setting out tougher rules for how companies handle user data. No details of the new law were immediately released, but earlier drafts required firms to get customer consent to collect, use, and share information. U.S. Secretary of State Anthony Blinken and G7 foreign ministers have agreed during a virtual meeting that the Taliban's actions will determine the relationship with the international community. Participants also underscore the imperative of safe passage for people wishing to leave Afghanistan. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg. Francine?
Angel, thank you so much. Now, coming up, Angela Merkel heads to Moscow in what will be her last meeting with Vladimir Putin as chancellor. Discussions will include Afghanistan and Nord Stream 2. We'll get the latest from Berlin. This is Bloomberg.
what seems to be a really tough situation better than almost anyone else.
We've worked hard on the supply chain. There's no question there's a lot of work to do in the supply chain for semiconductors. And we're happy that we were able to exceed our second quarter guidance, as well as, guide up for the rest of the year.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So Angela Merkel is heading to Moscow today, just over a month before German voters decide her replacement as chancellor. Now, she's set to meet with Vladimir Putin before heading onto Ukraine over the weekend. A Russian speaker, Merkel and Putin, have a long relationship, and she's provided an open line of communication between the West and Moscow during her tenure as chancellor. Now, that relationship may never be more timely than now, with Russia one of the few nations to keep its embassy open in Afghanistan after the Taliban took control. So for more on all of this, from Berlin is Bloomberg's Maria Tadeo. Maria, the significance of Merkel-Putin meeting is quite big. I imagine they'll talk about Afghanistan and Nord Stream 2.
Yes, and Francine, as you said, she is someone who has worked with Vladimir Putin for more than 10 years. Angela Merkel grew up in East Germany. She speaks perfect Russian. She knows, to some extent, how the Russians operate and the Kremlin politics very well. Now, two issues, of course, that will feature very high on the agenda is the situation in Afghanistan. When you look at German politics right now, this government is really struggling and scrambling to get their embassy out and their personnel out. The Russians, however, they say they stay put and will stay on site. A lot of the conversation will feature probably in terms of what to do with the new regime, what to do with the Taliban, and under what conditions perhaps that new regime would be recognized by both Russia but also Western powers in Europe. The other issue, of course, is the Nord Stream pipeline. That construction is going ahead. It won't be canceled. At one point, that was a debate whether or not Germany will go ahead with that. They've made it clear they will. But the conversation will feature on Ukraine and what to do with potential lost revenue that the Ukrainians may suffer from in terms of the transit fees from the gas pipeline, and what to do with the geopolitics in Eastern Europe. There has been for now months real concerns in Europe about Russia putting and deploying all of those troops in the Ukrainian border that may destabilize the country even further.
I have to say, Maria, I mean, the relationship, right, between Angela Merkel and the Russian leadership is so valuable, not only to Europe, but the rest of the world. Is there anyone who wants to be her successor who could replicate that?
Well, exactly, Francine. And we haven't really seen any type of leadership that compares to Angela Merkel in that front, purely because they speak eye to eye and they speak the same language. Also, she's someone that in her own background kind of knows how those almost Russian, Soviet style, that's something that she's repeated in the past, operates, and the techniques and the tactics that they use in their own diplomacy. In terms of in the European leadership, we have seen Emmanuel Macron of France trying to engage with Putin, but never to that extent. When you look at the internal domestic politics in Germany, we haven't seen anyone that can match or compare to Angela Merkel either on that front. Angela Merkel has that experience. When you look at Armin Laschet, he's someone that's cut his political ground in Germany. He's very much your typical German politician that's good at domestic policies, but not foreign. Olaf Scholz is doing well in polls. He's focused very much on the finance, but doesn't have the foreign experience. So there isn't a clear successor to that extent when it comes to Angela Merkel, and in particular, the Russian connection of Angela Merkel.
Maria, talk to me a little bit about the looming refugee crisis that could come and stem from Afghanistan. How will that reshape actually the German election?
Well, this is a big conversation happening in Germany this week. Of course, it brings up the echoes of the 2015 refugee crisis. I do have to say a lot of the political analysts and the experts on migration that I've been speaking to this week, they actually say this is a very different picture, purely because the European Union is now spending all of this money, especially in Turkey, to keep that at bay, to not have this happening in continental Europe. In terms of the actual debate, it is bringing up big differences between the Christian Democrats and the progressive side of German politics. Yesterday, I spoke with Annalena Baerbock, who is running, of course, to be the chancellor for the Green Party, and she said the priority is to help out people that have helped Germany on the ground in Afghanistan. Let's take a look.
We as a common international community have to stand now together because the NATO troops are in responsibility to save those people who have supported the NATO troops in Afghanistan, being a translator, being a cook, or being a journalist. So the NATO troops have to ensure now that these people can come to the airport, meaning also talking to the Taliban to save those people who trusted us.
And that was Annalena Baerbock, the Green Chancellor candidate, speaking about the need, the obligation that Germany has to help out the refugees in Afghanistan. Francine.
Maria, thanks so much. Maria Tadeo there in Berlin. Coming up, surging Delta cases delay the world's march back to the office. Can behavioral science help incentivize vaccine uptake? We'll talk to the chief executive of Vitality Health. This is Bloomberg.
An exceptional Q2. It's time.
The narrative of the day is strong earnings.
Bloomberg has the numbers.
We have about $12 trillion worth of market cap right here.
Find out who's winning.
Tesla beating across the board.
And who's losing.
That's actually pretty rare for Amazon. They typically don't miss on that scale.
And the voices to give you the important news.
Samsung reported another stellar quarter of earnings.
We are very clearly looking with confidence about what's next.
Bloomberg Television, your home for earnings season.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
While U.S. COVID deaths hit levels not seen since February, the CDC delays a decision on booster shots. We speak to the chief executive of health insurers Vitality up next. The Taliban set up checkpoints around Kabul airport, raising concerns about evacuations. Joe Biden says the militant group are in the midst of an existential crisis. And Merkel in Moscow, the Russian-speaking German chancellor, meets Putin for the last time to discuss Nord Stream and Afghanistan. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the markets are selling off. They're selling off a little bit sharply, or, well, sharply is not a word, but it's definitely a more sharp sell-off than it was just 15 minutes ago. The focus firmly on that data we had from, for example, China. So the China concern is about tech regulatory crackdown, and we saw a sharp sell-off in their commodities also because of what we could see in terms of the Delta variant and the hit on growth. So a lot of the attention will next week be on Jackson Hole. Today it is on China and some of the concerns about how quickly the recovery can continue to take hold. The FTSE, the DAX, the CAC 40 down between 0.3 and 0.4%. Now, the worst of the coronavirus pandemic may be behind us, but some offices aren't much closer to returning staff to their desks full-time. The spread of the Delta variant has forced many employers to delay back-to-work plans, with some firms mandating vaccines to enter offices. Insurance company Discovery, best known for its Vitality Health program, sees its incentive-based model helping to drive vaccine uptake. Well, we're joined now by the Chief Executive of Discovery. He's Adrian Gore. Thank you so much for joining us, Mr. Gore, here in today's Bloomberg Surveillance. When you look at some of the incentives out there, what's worked and what hasn't?
Well, I think firstly, incentives about behavior change do work. I mean, that we've seen very, very clearly. I think applying incentives to vaccine take-up is maybe much more complex. I think it's early in the process now, and I think that the behaviors you're trying to change are very, very, they are complex, they're ideological, they're based on often a fake sense of science, etc. So this is a complicated behavior to change. But I would say to you that the fundamentals of what we're trying to do around behavior change and making people healthier just seems so important in kind of a COVID and post-COVID environment. I mean, we've seen the data of just how resilience is critical against death from COVID. So, the kinds of things we are focusing on around wellness, physical activity, nutrition, incentivizing that has become much more important as we move into this post-COVID environment. So it's a complex environment, but one where I think we are very excited about the impact we can have.
But how can, for example, an insurance company, where people are very health aware, if they use the app, try and counter some of the fake news out there?
Well, I think the fake news can only be dealt with through all kinds of methods of intervention, of education, etc. But we are trying our best to share the data that's emerging from the vaccine, make it absolutely clear that the combination of vaccination and better lifestyle choices is the only way to survive in a post-COVID environment. So I think it is a difficult battle to have, and I think in our home country of South Africa, for example, I think the vaccine process is going very, very well, but we're battling the same kind of issue of vaccine hesitancy. So I think what we are trying to do as much as we can is we are completely and totally aligned to our customers. If our customers are healthy, that's good for us. And I think our shared value model is about using those incentives to change behavior. So as we learn more about what incentives work to change vaccine behavior, we will do that. But at this stage now, I think we're trying our best to incentivize, to show people the data emerging from the use of vaccines, and it's remarkably compelling, as you will know. So this is hopefully a battle that we will win, but I think there is only really two ways forward through this COVID environment: vaccination and better lifestyle choices.
Have you learned any lessons on actually vaccine administration that could help for booster shots and could help people, convince people that actually vaccination is the right way to go?
I'm not sure the data on the booster shots yet is still early, and I think that needs some development. But I think the emerging data out of the vaccinations and out of looking at hospitalization rates and particularly death rates has shown absolutely without any doubt the kind of delinking of infection to death. The vaccines have done that. And I think the best we can do is illustrate and demonstrate that data to our customers and to our members and to incentivize that. So, for example, we are now actually differentiating our life insurance premiums, what we charge for life insurance, based on whether people are vaccinated or not. So we're using the data in fairly profound ways. And I think that the financial benefits to people, the obvious health benefits should be clear, but that unfortunately are not. But we're using our data more and more to show people that the chance of death is high. And if you buy things like life and health insurance, you will end up paying more for them if you're not vaccinated. So we're using all of the financial levers we can to try and change that behavior. And I think that is fundamental.
So, Adrian, I know you've recently launched a survey of almost 90,000 of your members in the U.S. And actually, I don't know if the process was then of Q&A. How many of those members are now actually fully vaccinated?
Well, I think we found about 70% or more were fully vaccinated. And I think we found in different markets similar kinds of vaccine hesitancy and similar kinds of ideas about why they do and don't get vaccinated. So it is a very complex behavior to change, I have to say. In our home market here in South Africa, as I said, we are trying our best to overcome what is now a very successful rollout of the vaccine, but again, fight against attitudes about vaccination. I think incentives, when you think about financial incentives and lifestyle incentives around changing behavior, some behaviors are simple to change. Getting people to be physically active is one of the best kinds of behaviors to change. I think vaccine behavior is more complex. I think the deep ideology in certain markets makes it much more complex battle to fight.
I mean, we've also seen certain companies actually say, please don't go back to the office unless you're fully vaccinated. I mean, when companies say that, is there an immediate uptake of the vaccine?
I think you do see that. I think it's early days that companies are doing that. I think we're only seeing now the effects of that. We as an organization around the world are trying to do that. And in fact, in our Vitality program, we are giving Vitality points and incentives to be vaccinated. But I do think that and we have seen that when companies do say that to work at our company, you either cannot enter the building, the premise is actually not vaccinated, or you can't be employed here, it does have an effect. But I think the data is early. We have to see how it plays out. I do think from a Discovery Vitality perspective, we do advocate a very strong view on this and are kind of absolutely focused on trying to get our people vaccinated. And we are, as a company, saying in a number of months' time, we will be making it compulsory. But again, I think it's early days in this debate, but we have to work very, very hard to do this. It's the only antidote.
Discovery has a very strong track record of robust investments in actually new business. 18 months into the pandemic, or maybe not 18 months, 16 months into the pandemic, how has your view changed on how capital should be deployed?
I think that hopefully the pandemic is coming through as we enter into a post-COVID world, but I do think capital should be deployed in areas of wellness and resilience and healthcare. I mean, we've seen that. I think there's a massive, massive shift to focus on wellness and resilience and understanding that. So the focus we've had on building our businesses, our tech, our Vitality platform, I think will pay off remarkably well. I think that deployment of capital into understanding illness, understanding the correlations and causality is more important than ever. I mean, we've seen again in this COVID environment that our model was kind of built out of a focus on non-communicable disease, disease of lifestyle. We found the same resilience factors apply to infectious diseases, to COVID. So capital and focus on making people resilient and understanding healthcare and using technology and healthcare to broaden access is fantastically powerful, I think, for society and therefore for businesses that do it well. I think it will pay off remarkably well. So we've invested heavily during this period, as you've said, in our new businesses and are seeing, I think, a very good evolution as we come through this COVID period.
Adrian, thanks so much for joining us. Adrian Gore there, the Chief Executive of Discovery. Now, New Zealand has extended its lockdown by 4 days, trying to stop its latest outbreak of coronavirus. This week, the country's central bank delayed an expected rate hike, which the governor, Adrian Orr, says may now happen in October.
We have to focus very much on our purpose, which is, of course, the inflation and employment mandate that we have. And, absolutely, this week was not the best timing to be looking to reduce interest rates, given reduce the monetary stimulus, I should say, given the health situation. But, time is on our hand. We can observe what is going on, and the underlying economics remains the same. We have significant capacity constraints. We have one-off price spikes. We have rolling supply disruption creating the costs. We are above maximum sustainable employment. So the underlying situation remains the same. But we thought best, let's just observe over the next few days at little cost to us. And we need to just be true to our mandate, which is to say, are inflation pressures rising? Are we at or above maximum sustainable employment? And hence, should we be back more at a neutral interest rate? What would change that view? Well, you would have to see a significant shock to demand. What we've learned through time is that incomes remain strong, demand bounces back very quickly, and that these rolling lockdowns will continue for a while. So that flexibility, remain focused on the medium-term target.
Well, I hope all those investors and traders who you know, kind of control the market expectations for rate changes are listening closely, because market expectations for an October hike, which had been much, much higher, maybe close to 100, are down to 59%. Maybe that's, first of all, because you skipped this rate hike in the midst of that sudden lockdown in New Zealand because of this surge outbreak, or the case outbreak, but also maybe because it's not going to be a monetary policy statement meeting where you typically would make a rate change. It's a monetary policy review meeting. Now, it's true, you announced the end of your long-term security asset purchases at a meeting just like that. But are you then saying that October is a live meeting regardless of any of this?
Of course, October is a live meeting. You know, we retain the right, but not the obligation to move policy when we think it's necessary. We can communicate in many different ways. Our monetary policy statement released this week outlines very clearly our views on what the neutral interest rate is, where we see the capacity pressures, how we see inflation performing. And, you know, we have the official cash rate back at neutral over next year, the course of next year, which is 2% compared to 0.25 now. What would push us off that course? We would have to be very convinced that the supply side has suddenly been able to respond, removing inflation pressures, or the demand side for the economy has had a significant turnaround. And that would mean fiscal policy is not doing its job.
That was the RBNZ Governor Adrian Orr. Now, in the meantime, a lot of market movements. The HSI actually entering a bear market. The Hang Seng, you can see, down some 20% since February. So that's officially now in the bear market. Down day, once again, in Europe. Concerns about Delta, concerns, of course, about what's happening with tech regulation in China as well. Up next, we discuss the latest market moves with Noor Al-Ali from our Markets Live team. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Angel Feliciano. Hi, Angel.
Hi, Francine. The U.S. Federal Trade Commission has refiled its monopoly lawsuit against Facebook. It alleges the social network pursued a strategy to buy or bury rivals to suppress competition. The suit asked the court to unwind Facebook's acquisitions of Instagram and WhatsApp. Facebook says the takeovers were lawful and were reviewed and cleared many years ago. The new surge in U.S. coronavirus cases has prompted Apple to delay its return to corporate offices from October until January at the earliest. But the company says it does not expect to close offices or retail stores. Meanwhile, Charles Schwab also is delaying its return to office plans to no earlier than January. OnlyFans is getting out of the pornography business. From October, the company will prohibit sexually explicit conduct on its website, although some nude photos and videos will still be allowed. OnlyFans has attracted more than 130 million users, its popularity increasing during the pandemic as sex workers, musicians, and online influencers use it to charge fans for exclusive content. And that's your Bloomberg Business Flash. Francine?
Thank you so much, Angel. Now, the Hang Seng actually entering a bear market, which means that since February, we saw a 20% plunge. Now, for an overall talk about the markets, joining us now is Noor Al-Ali from our Markets Live team. Noor, great to speak to you. Yesterday, we were talking about the Fed and some of the Fed moves. We talked about regulation. It feels like all of these various points of anxiousness from the markets kind of are filtering through today.
Yeah, absolutely. I mean, I woke up this morning expecting to see some form of movement. Yes, we had an extended sell-off in Asian equities, as you've just mentioned with the Hang Seng, but there is some more room to go there because its previous PE ratios gives it, I think, a bottom of about 27% in the past two peaks that we've seen before. So unfortunately for Chinese equities, especially with the onset of more regulatory clampdown from the government there, it's a little bit unclear where these assets are going. But if you look at European markets today, I mean, it's kind of like a Friday morning, you know, people are just waking up. It's as if the other day never happened and the sell-offs just disappeared into our memory.
Noor, so what exactly is driving the markets? Is it also very thin volumes? And I know I've been asking you all week, but it's, you know, yesterday we're speaking to market strategists that were saying actually this is, the start of something more sinister, and others saying it's just maybe a quirky day in the summer months.
You know what? I've actually gone back to my desk yesterday, and on the Markets Live desk, I've looked at volumes because I've been saying, you know, August is historically a low volume month. So I've looked at the AVAT function for the equities yesterday, at least for the stock 600, and it was pretty much at about, you know, it seemed pretty low for the levels that we've seen today. So definitely I can tell you that while the current spot market was, at least for yesterday's market, was a little bit subdued, the futures market had a bit of more volume, at least for U.S. equities. But then we saw U.S. equities open yesterday, and it was as if the Asian sell-off never really happened for them. So you can see a bit of a divide here with what's happening with markets. The U.S., you know, wakes up and they see, oh, God, sell-off in Asian equities. What's going on there? But doesn't really follow through there throughout the trading day. And the dollar has just, you know, extended its rally to its new year high here. So we're seeing a bit of a divide of how markets are pricing in the FOMC meeting. But of course, with Asian equities, it's the Delta variant, at least there, and the Chinese regulatory onslaught there.
Noor, I know the Markets Live team are also spending quite a lot of time looking at commodities and, you know, whether there's a sharper sell-off in commodities and whether that actually infects other asset classes.
Look, there are two schools of thought here. Some people do argue, and I'm in that camp as well. On the long term, commodities have so much more to give, especially when it comes to assets like copper, where, you know, they're a lot more relevant for the EV, you know, the EV strife and the green move that we've seen there, because you do need copper to build a lot of the electric vehicles that are out there, with especially more movement. But you've got things like oil, really, and when that argument comes into play, it's really harder to see, you know, the concept of a super cycle, as many have been saying. We've had Bloomberg economists say, you know, perhaps it's a mini cycle, and we've seen the dip. You know, it all comes down again to September 1st when OPEC meets and whether or not they're going to heed to what the U.S. wants.
Noor, thank you so much. Noor Al-Ali there from our Markets Live team. Now, coming up, as well as a human toll in Afghanistan, there's also the impact of the economy in free fall. We'll discuss the latest on the nation's crisis next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So it's been 5 days since the Taliban swept into the capital, Kabul, as the military and government crumbled. There were chaotic scenes as U.S. troops at Kabul airport strove to evacuate Americans as well as Afghan civilians, fearful of retaliation for working with foreign militaries. Well, here to round up this week's distressing developments in the Central Asian nation is our Afghanistan reporter, Eltaf Najafizada. Eltaf, thank you for joining us. I know you've been extremely busy trying to contact people on the ground to exactly figure out what is going on. What is the situation like right now? How destabilizing is it?
Well, the situation is still kind of chaotic because people on the ground, they are rushing toward the airport and several embassies in the hopes of being evacuated by different countries, such as Canada has promised to evacuate 20,000 Afghans, or the United States have promised to evacuate thousands of Afghans. So those Afghans have been keep coming from different cities into Kabul and rushing toward the airport embassies. It's chaotic in those areas, but overall in other areas the situation is getting under the control of the Taliban. The Taliban are trying their best to stabilize the city, especially the capital of Afghanistan.
Eltaf, are there any signs of resistance to the Taliban actually building across Afghanistan?
Yes, we have seen reports of people protesting against the Taliban across the country. The demonstrations have been conducted by people in capital Kabul or other several cities in the eastern and southern provinces, like in Jalalabad and Pune and those areas. However, this protest has not been so wide, but it shows some signs of resistance against the Taliban, that they don't accept any Taliban-led government, which they had in 1990, same Taliban-led government. So they would like to see more freedom for women. They would like to see women having job in the government, having some sort of freedom in the society.
Eltaf, thank you so much. Our Bloomberg Afghanistan reporter there, Eltaf Najafizada. Now, in the meantime, we'll look at the markets in a second, but I want to bring this to you. Tonight, Bloomberg will be premiering a TV special, Inside Venezuela. Our Eric Schatzker sits down with those who are set to decide on the country's future, Nicolas Maduro and his opposition. Now, playing out tonight and over the weekend on Bloomberg TV. Let's also have a look at the markets, because for a Friday actually in August, the markets are really on the move. I know volumes are thin. We had a nice brief from Arnour Al-Ali looking at some of the dynamics. First of all, it's about tech crackdown. The other, of course, is at commodities. Because of the Delta variant, a lot more people worried about what it means for the future of growth. So we're seeing faltering growth, China's regulatory curbs really compounding risks right before the Fed's Jackson Hole Symposium next week. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins us out of Berlin, Kaylee Lyons out of New York, and of course our Danny Berger will join us as well. This is Bloomberg.
Blast off. China's first manned mission in 5 years is on its way. 2 veteran astronauts and 1 newbie are making their way to Tianyi Space Station, which means heavenly harmony. They're travelling in the Shenzhou 12 spaceship, launched by a Long Mark 2F Y12 rocket.
我们一定服从命令，听从指挥，沉着冷静，精心操作，圆满完成神舟12号载人飞行任务。
The crew members will be staying at the station for 3 months. They'll be carrying out experiments, testing equipment, maintenance and more.
2022年完成空间站的在轨建造，建成国家太空实验室。之后，空间站将进入到应用与发展阶段。
Once completed, the space station will allow for stays of up to 6 months, just like the International Space Station.
出发，是，敬礼。
China has big ambitions for its space program. Last month, it landed a probe on Mars that carried a rover, the Zhurong. It sent 11 astronauts into space and 2 years ago sent the first spacecraft to land on the far side of the moon.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is Venezuela, a country that has suffered one of the greatest economic and humanitarian crises in modern history. Today, it appears Nicolás Maduro and his government are prepared to negotiate an agreement that might end U.S. sanctions and pave the way for free and fair elections.
Hopefully we can find paths of closeness, of respect.
Join Bloomberg Television for a special report, Inside Venezuela, Friday at 7.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
We retain the right, but not the obligation to move policy when we think it's necessary.
But if they make a misstep, I think they are likely to tighten too late rather than too early.
I think this Jackson Hole is going to be very interesting.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, August 20th. Our top stories today. It's a week to forget for investors. U.S. stock futures are down, and the coronavirus is just one of the reasons for gloom. Now many are waiting to see what happens at next week's Fed Symposium in Jackson Hole. And don't forget China's impact. That crackdown on big tech has resumed with a new law on personal data. And think you're going back to the office? Well, the Delta variant surge has companies around the world rethinking their plans to have staffers return this fall. Well, good morning, everyone. I'm Francine Lacqua with Danny Berger in London, Kaylee Lyons in New York. Matt Miller is actually off today. Kaylee, if you look at the markets, over the last 3 days, we had a little bit of a pattern, which is Asia sells off, Europe sells off, less in Asia, but actually the U.S. usually buys on the dip.
Yeah, and we'll see if that comes true again today, Francine. Certainly the sell-off in Asia had. If you look at the overnight session, it was broadly lower across really the entire Asia Pacific, but really the underperformance was led by China and Hong Kong. The CSI 300 down about 2 percentage points, and actually the Hang Seng Index plunging into a bear market. The concern there, of course, is regulatory concerns coming out of Beijing with that new personal data law designed to crack down on big tech, and that actually took the Hang Seng Tech Index down to a new all-time low. And of course, you also have Chinese state-sponsored media talking about other areas that could see restrictions, and one of them is being the online prescription drug space, and that took JD Health International down 14% in the day's session. In other asset classes, I would note it is a broadly stronger dollar story again today, but one exception to that is the Japanese yen, which is fractionally stronger against the dollar as it gets kind of that haven bid. It's sitting at 109.69. And then we are seeing a rebound in the commodity complex, including iron ore, of course. It had a double-digit decline yesterday. Today, though, futures up about 6.4% in Singapore. As for the picture here in the U.S., it was a very choppy session yesterday. We did see equities eking out gains, but this morning, once again, futures are in negative territory. We're down about 20 points on S&P E-minis. I want to point out, going to pay attention to volatility today. We're looking at a 23 handle on the VIX. We are around the highest we've seen in about 2 months, and we do have options expiring today, so that could mean a little bit more volatility once the open does indeed come. Slightly lower in the Treasury market, down less than a basis point on the 10-year yield. However, that would be the 6th down day, 4 yields in a row. We're sitting at 123 on the 10-year. And finally, crude not necessarily taking part in that commodity rebound. It was positive earlier, Danny, but once again down by about 0.4%, just above $63 a barrel.
Yeah, those cyclicals still not able to catch any buy the dip action. Look, Europe is certainly looking more bright than the rest of Asia, the rest of the U.S., but that doesn't mean it's a pretty day. We're still looking at a mostly negative markets day. Really the only thing to perform better are small caps in the UK, and that's simply just a factor of a stronger currency, of that pound FX effect. Elsewhere, we're just seeing these really high beta cyclical type names sell off throughout most of Europe. So you're seeing Germany look really weak. Italy looks weak as well, and perhaps a little bit of strength in Spain, but that's pretty much as far as you're going to get in terms of outperformance in Europe. So let's quickly look at your headline index. It is down 0.2%. This is the first time since June that Europe, US, and Asian equities are on track to end the week lower. So that gives you a sense of just where we are in this market and what the current mood is like. Now, a German Bund is tracking the US 10-year. We're heading towards a negative 0.5%, but the pound underperforming today. I was saying this earlier. This is why you're getting some outperformance in UK stocks. Cable getting hit by a UK retail sales that had started to drop. It's that reopening story seems like it's backtracking a bit, especially here in the UK, despite the fact that Delta had peaked in the region earlier. Finally, Francine, I'm going to do my best Matt Miller impression and talk about autos today because it's the worst performing sector. And look, this is really important for what's happening in markets today. It's underperforming after some of the comments from Toyota on them having to cut production by 40% because of an ongoing chip shortage. The renewed cases of Delta, Francine, means that car makers aren't able to get the chips they need to put in production. I think that's a really good microcosm of sort of the Delta fears throughout the entirety of this market.
I can't believe Matt is off today. We also have two really good pieces of news with a British grocer, and actually he always says how much he loves UK grocers. M&S up 5%, and also Morrison, another bid, gaining some 7%. Now look at what else is ahead today, and Angela Merkel travels to Moscow for a meeting with Russian President Vladimir Putin before making her way to Ukraine over the weekend. Deere releases second quarter results before the bell. Dallas Fed President Robert Kaplan will speak at 11 a.m. New York time. And then tonight at 7 p.m., Bloomberg special Inside Venezuela, our Eric Schatzker in conversation with the Venezuelan president, Nicolas Maduro. Now, Chinese stocks tumble as the country's tech crackdown moves into a new dimension. The administration has passed legislation setting out tougher rules on how companies handle user data. Well, joining us now is Enda Kern, our chief Asia economics correspondent. Enda, a lot of investors trying to figure out what's next in terms of regulation. The others also trying to figure out why now.
Well, it seems that there is plenty left for regulation, Francine. That's all the indications. The move on tech today coming out of the NPC is on the one hand all about protecting consumer data and personal privacy. But of course, on the other hand, it's all about ensuring that the party remains in firm control of the big tech sector and most importantly, in firm control of data. We don't have full details of the law that was agreed today, but some of the pointers that have come out include, for example, limiting the kind of profiles that tech companies can keep of their users and clamping down on what these AI programs can recommend users to buy. So it's an example of another crackdown on the tech sector. There's no end to it in sight, and I think all indications are that we'll see more measures coming in the weeks and months ahead.
And the measures and the details of them may be new, but they're not surprising. We know that this is the direction that Chinese regulators are heading. So why do we continue to see a market that acts surprised, that sells off very dramatically?
That's a very fair point. You know, on the one hand, I think the surprise factor here is the aggressive implementation of it, maybe the suddenness of some of these moves. There are, of course, China watchers who say a lot of these moves have already been signaled in speeches and in state media for some time. But nonetheless, the suddenness of it is catching investors off guard and is hurting sentiment. But to your point, this is all about bigger structural conversation going on about China's economy and how to make the workforce more productive and how to make it cheaper to grow families. And I think that that's what the agenda of the central government is, regardless of what the stock market does.
All right, Bloomberg's Enda Curran, our chief Asia economics correspondent in Hong Kong, thank you so much. And another risk looming over the markets is the Delta variant. The rapid spread of the variant continues to force many employers to rethink their return to office plans. Bloomberg's Kriti Gupta joins us now and has all of the latest data. So Kriti, basically office activity is still quite low.
It absolutely is. Kaylee, you are really seeing that blockbuster idea that you started to see, this blockbuster return to office in September at the end of Labor Day, now getting postponed to October, even to next year. And it's not just here in New York City. You see it in Wall Street, you see it in Silicon Valley, all across corporate America. And it turns out it's actually an international story. European investors, or European workers, I should say, waiting for some of those school holidays to end as well. In Asia, waiting to really ease those restrictions, very cautious of what that next wave might look like. But let's look at the data, because that's what we do here at Bloomberg. We have to look at the mobility data coming out of around the world, and of course coming out of Google in particular, starting to compare what the workplace activity is now all the way back to pre-pandemic. And what you're seeing isn't a very pretty picture. Still, even San Francisco, in New York, still half of what it was pre-pandemic. And even in Asia, down 3% in Hong Kong, and even in Europe, about down a third of what it was pre-pandemic. So lots of room to make up, Kaylee.
Kriti, can we tease out a little bit one thing you mentioned, and that's Wall Street? What exactly do their plans look like at the moment as it relates to the return to the office?
Well, Danny, Wall Street firms, the big banks, were going to lead the charge when it came to New York City, that return to work, really setting the example for major cities across the U.S. and across the world. That has all kind of taken a pause when it comes to dealing with the Delta variant in particular, which is highly transmissible. So not only are they pushing their plans further out, but the folks that are going into the office are starting to really pause and take more stringent measures, requiring vaccines, wearing masks wherever you go. And that's in addition to some of these big banks and these big firms starting to look at a lot of pay raises. You just saw a visual on your screen about BlackRock, for example. We all heard about that 8% pay raise, looking at our watches, waiting for that raise to hit us. And now you're seeing Charles Schwab do the same. Not only did they push their return to office to 2022, but also boosted their pay for staffers by 5%, Danny.
Kriti, thanks so much. Bloomberg's Kriti Gupta there on some of the moves we're seeing from finance. Now to Washington, where House members will get an unclassified briefing on Afghanistan today. This comes before the House returns on Monday for a classified briefing and a vote on the Senate's budget resolution. Well, let's get straight to Emily Wilkins, Bloomberg government reporter, who joins us now from Washington. So, Emily, how's D.C. actually looking at Afghanistan right now? It seems the Taliban are clamping down and they're racing to get people out.
But right now, what we're seeing in D.C. is a lot of questions, a lot of people who are looking for answers. I mean, what we are seeing right now on the ground in Kabul is not the picture that the Biden administration painted several months ago when he started talking about how troops would be withdrawn from the region. Lawmakers on both parties have had a lot of criticisms for how this withdrawal has been handled, and they have a lot of questions that they want to get to the bottom to. This unclassified House briefing today, that's just the start of it. They're going to be having more briefings with the Intelligence Committee, with top officials both in Congress and with the intelligence committees in Congress. They're going to be looking more into this. You've already heard at least 4 committees come out, and both 2 in the House, 2 in the Senate, saying, hey, we need to look into this. We need answers. What did people know? When did they know it? And why was the withdrawal in such a state of chaos now, where U.S. citizens and Afghanistan allies who they want to get out of the country and bring to the U.S. aren't able to do so, can't get through that airport? So I think a lot of questions. This is something that we're going to see next week. But remember, lawmakers are technically in the middle of their August recess. Next week is kind of an asterisk to that. So we're going to be seeing a lot more when everyone comes back in September.
So let's look ahead to next week, specifically Monday, the 23rd. What exactly are we expecting to take place in the House, Emily?
So on the 23rd itself, we're just expecting House members to come back. It's really later in the week that we're going to see the drama begin. This vote over the budget resolution. And we've been talking a lot about the whole infrastructure versus reconciliation. The budget resolution is that sort of blueprint for reconciliation. It needs to go first so they can hash out the details of reconciliation. There's still a question on whether that's going to pass the House. They need all Democrat support, and you're currently seeing a standoff between moderates and progressives over when that infrastructure bill is going to pass. But after they take that vote, as well as a vote on a voting rights bill, they are expected to go back on recess, return back to their districts until about mid-September, when they're expected to come back to D.C. and start wrapping up more of the reconciliation process and finally pass that infrastructure bill.
All right, Bloomberg's Emily Wilkins in Washington, thank you so much. I do want to get back to the markets now and take a look at some stocks moving in pre-market trading here in the U.S., and a number of them related to COVID-19, one of them being vaccine maker Moderna. It's down about 3% in early hours. There was a report out overnight from the Washington Post that its vaccine may have a stronger link to a heart issue in younger recipients than previously thought, so that is weighing on sentiment. This is also a stock already down 22% from its peak earlier this month. Another stock moving to the downside on Delta variant-related concerns is Norwegian Cruise Lines. Broadly, some pressure in the travel sector today. This is one of those stocks feeling that. It's down 2.3% before the bell. And then separately, we do have an earnings story. Applied Materials, which is a maker of semiconductor manufacturing equipment, reported last night actually a pretty strong quarter. They are really benefiting from chip makers trying to boost their output. Strong quarter, strong outlook, and yet the stock is down about 2%. Francine, maybe just weighed down more broadly by the risk-off tone we're seeing today.
Yeah, I just find it incredible. So you know, you have the car makers actually saying they don't have enough chip makers or chips, but Applied Materials says it's actually producing so many more of them. Now, coming up, we'll talk about supply chains with Mark Hafele, UBS Global Wealth Management Chief Investment Officer. This is Bloomberg.
Coming up this week on Bloomberg Green, it's meat, but not as you know it. From plant-based to slaughter-free, we'll look at the innovation hitting your dinner table.
If a meat replacement is truly going to be a replacement, then the company that's making it needs to make more than just burgers and sausages.
And it's not just meat, but seafood too. We'll look at the startup growing shrimp and crab in a lab to make food more ethical and environmentally friendly.
Our mission is to feed the 10 billion that we will be in the next couple of decades.
Plus, turning your beer green. We're not talking St. Patrick's Day, but the plans from Heineken and BrewDog to make the drinks industry more sustainable.
We are part of the race to zero. We are the first global brewer to make a commitment to fully decarbonize by 2040.
I'm Kaylee Lyons in New York, and catch Bloomberg Green this weekend on TV, Quick Take, and online.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger with Francine Lacqua in London. Kaylee Lyons is in New York. As this market continues to reflect a more negative, a more pessimistic type attitude, we've been digging through the survey data. Everyone from businesses to investors to corporations has started to see their sentiment move more south. And I have another data point along those lines. Now, I have a chart here, so I also want to welcome our radio listeners as well. I know you can't see this chart, but I will explain it for you. Essentially, I have here the AAII, American Association of Individual Investors, their survey. They basically go to those in the association and say, okay, are you a bear? Are you a bull in this U.S. equity market? Now, again, for our radio listeners, for most of this year, and really until very recently, we've had the vast majority, around 30%, for example, back in April, saying that, yes, indeed, they are bullish on this market. But just in the past week, we've had that flip. Now we are are net bearish when it comes to this sentiment survey. Again, that comes off the back of an equity market that has started to dip. We saw U.S. stocks barely eke out a gain yesterday, Europe having its worst day in a month, and of course, the Hang Seng entering a bear market. So what does this mean? Where do we go from here? To get a better idea, let's bring in our favorite charter holder, Eddie Vanderwalt, Bloomberg Markets Live editor. Eddie, sorry for the cheeky nod to your CFA. So, you know, do it justice, but along these lines of this sentiment change, are we seeing any signs of capitulation in this market?
Wow, I feel a lot of pressure right now, Danny. Listen, yeah, absolutely. I think we are just seeing a little bit of capitulation. We see that in the commodity space. We're seeing the stock market just not being as bullish as it was, and I think there's a number of reasons, right? I mean, number one, U.S. Retail investors are extremely important in setting the tone for sentiment globally. But I think also what we're seeing is, you know, the Delta cases, and particularly in China, the softening in China, that matters for commodities, and that matters for the dollar, right? And then on top of that, what we're seeing is, we're moving into Jackson Hole. And I think as we move into Jackson Hole, the central bankers are looking for a bit of collective responsibility. They don't want to be the single one who pulls the trigger. And I think, you know, in this environment where they're all together, they've got a bit of cover and saying, okay, now is the time to kind of pull the trigger on perhaps a bit of tightening. So I think next week's going to be very, very interesting.
Eddie, what do you mean? You hold the CFA and we're not talking like 3 standard deviations. What is going on, Eddie van der Walt?
No quantitative analysis at all. I'm so disappointed.
Not yet. Well, not yet. That's like level 6 or 7. Eddie, when you look at the pattern that we've had so far, it seems that the U.S. is just hanging on to their gains because they're buying on the dip. Is there anything supporting that?
Buy the dip's absolutely been the mantra of our times, right? But it cannot go on forever. At some point, these markets pull back. Whether it's going to be now, whether it's going to be a couple of months in the future, don't know. But I think, you know, that chart that Danny showed us, I think that just underlines to me that investors are accepting that at some point, this party is going to end. And it feels like that is now. We will see in the next weeks whether it is. And, you know, there's a lot to happen still. The PMIs at the beginning of next week, I think that will be really interesting, because if they show that the pivot towards services continues, I think that will help sentiment a little bit. But if they don't, if they show services softening, you know, then the wage pressure and so on, all of those things will just push the Fed towards that quicker tightening. And it could just be difficult for the stock market.
Eddie, our colleague John Authers is out with a column on the Bloomberg today talking about TINA and how TINA, there is no alternative, just keeps getting reinforced because bond yields are still so low. Do we have to see bond yields moving higher in order for us to really see money coming out of this equity market?
I think so. I think we do see bond yields move first. I think bond yields are absolutely the thing that has been driving all of this. The fact that bond yields have been so low has meant the discount rate on equities has been, you know, just phenomenally low, and therefore, you know, you could justify these high valuations. But if the bond yields start going up, there's a flip side to TINA, right? There's a flip side, because once you see those bond yields going up, there's no place to hide. People will, and I think that's what worries me about the rally in the dollar over the last few days. The dollar is absolutely, you know, so bullish, and that just looks like a fear barometer right now.
Yeah, I mean, the dollar, extremely, extremely interesting. I think we'll speak about it also with Mark Haefele, also the commodities sell-off. Our Bloomberg MLive, Eddie van der Walt. Now, coming up, Vincent Reinhardt, Mellon Investments chief economist and former Fed official. That interview, 7 a.m. in New York, 12 p.m. in London. I know we'll ask him about the dollar as a risk barometer. This is Bloomberg.
we talk about those NPLs, will they stay high?
As all of you are very fully aware that the second COVID wave hit India hard and hit India suddenly. So obviously, I would say almost 50 days of the quarter were impacted in a very significant manner. And that has come through on the retail portfolio side. So while all the banks and financial institutions saw higher than expected retail slippages during the quarter, but we do believe it is transitory. We expect moderation in the second half of the year. We've already seen positive trends come through in the second half of June, and July has been much better than June, and I think the same trend has continued in August also. The demand resolution, which was 98%, is already reached 99.5%, or what I would say pre-COVID levels. There is a 26% year-on-year recovery, improvement in recovery.
Power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua and Danny Berger in London. Now let's get the first word news. And the biggest tax hike on wealthy Americans since 1993 is bogged down in Congress. The tax writing committees in the House and Senate are almost certain to miss their September 15th deadline for coming up with details. The problem is lawmakers don't know how big President Biden's spending package will be. Plus, they have different ideas about which tax measures to enact. In Texas, a setback for Governor Greg Abbott's efforts to suspend school mask mandates. The state Supreme Court has given local school officials temporary permission to require students to wear masks to class. Abbott has said wearing masks should be a matter of personal responsibility, not a government mandate. It will be the Biden administration's most high-profile trip yet to Asia. Vice President Kamala Harris will look to bolster economic and military cooperation in China's backyard. She'll visit Singapore and Vietnam starting this weekend. Leaders there will look for Harris to reassure them of America's role as a major trading partner, and Harris will be able to raise her international profile. And Tesla spent yesterday celebrating artificial intelligence. The company highlighted progress as well on its own semiconductor. It's designed to train neural networks that are the brains behind Tesla's driver assistance programs. Plus, CEO Elon Musk also discussed plans for a lifelike robot that he said would take the drudgery out of everyday life. I really don't know what to make about that robot, Danny, but I guess it's pretty cool, in theory.
My favorite thing is that to present it, someone apparently went on stage in a white suit and a black helmet, and Francine did some jerky robot dance. So I guess that's what the robots are going to look like.
We need the video. Is it cooking for my kids? Because that's the only thing. I mean, he talks about dangerous, repetitive, and boring tasks. So cooking for the family would be up there. So I don't know whether the Tesla bot just drives. Or
Dancing's not, though. I mean, we need to keep doing that. The robots can't take dancing from us.
No one will take dancing from us, ever, Danny and Kaylee. Coming up, Mark Haefele, UBS Global Wealth Management Chief Investment Officer. We talk about the markets. We're seeing a sell-off still in Europe. We talk dollar, we talk commodities. Maybe we'll talk the Tesla bot. This is Bloomberg.
Web3 is entirely online, ostensibly because of the pandemic, but in large part, we're seeing a massive pivot to mostly live streams for video game coverage. We're going to be all online instead of in the convention center for the first time this year, and that promises to be a really different experience.
Industry has really been interesting during the pandemic. It has actually grown substantially since everyone was stuck inside. And of course, this makes sense, right? We're all looking for some amount of entertainment, and stuff like Fortnite in particular offer also a social component, right? People can join up and kind of meet up online and spend time with their friends. So in a lot of ways, this all makes sense.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Danny Berger in London, Kaylee Lyons in New York. Matt Miller is actually off today. Now, Danny, if you look at the markets, there is a sell-off. There's a sell-off that could be short-lived, or it could actually be continued in U.S. markets.
Right, and I know Matt Maley of Miller Tabak was talking to you, Kaylee, and Matt yesterday, saying that it's just the start of something. It certainly feels that way. I mean, it's not an outright capitulation, but it does have the sense that people are giving up. Of course, Francine, it's also the summer months, so volumes are low, so the chances for heightened volatility is, of course, even higher.
Yeah, Kaylee, how are you looking at the markets?
Well, they are definitely lower, to Danny's point. Volume about 14% below average on the stock 600 in Europe right now. And after being in positive territory earlier, it is once again lower, down by about 0.25%. And here in the U.S., of course, 4 hours to go until the opening bell. We did see a choppy session yesterday that actually ended in gains, but that day started with futures lower, and that is how today is starting as well. Futures are down about 0.4% on S&P E-minis. You are seeing that bid continuing to come into the bond market. Yields lower for a 6th day in a row. We're down 1 basis point on the U.S. 10-year yield to 123. And you are seeing just the smallest of rebounds in the commodity complex. The Bloomberg Commodity Index yesterday plunged to its lowest level in 2 months. Today, trying to stage a little bit of a comeback, but it's only up about 0.25%. Of course, as those Delta variant fears continue to loom over this market, you are seeing that show up in some travel-related stocks in pre-market trading. The likes of Norwegian and Carnival Cruise Lines down 2.3 and 1.3% respectively. Delta is in negative territory as well. Delta Airlines, that is. And then finally, Moderna, a vaccine maker, it's down already 22% from its peak, set to be lower by another 3% or so today, at least judging by pre-market trading. Some concern about a heart issue in young recipients of its vaccine that was reported on by the Washington Post overnight, Danny.
Well, Kaylee, I'm looking at something that when stocks like you're showing are red, that this is reliably green. I'm, of course, talking about VIX, the options gauge of volatility. I want to welcome our radio listeners as well, who I will explain to you the chart I have. But I want to point out that the VIX is higher yet again today. We're looking at a VIX at a 23%, the first time over 20 in a couple of weeks. But it's not just that. It's the volatility that's been forming under the surface for the past week. Now, again, for our radio listeners, I have a bar chart of weekly moves in the VIX. It is not percentage change. It is percentage point changes. So all of the math nerds out there, don't get upset. This is not a percent of a percent change. But basically, we've seen the VIX fall lower pretty consistently. And when it perks up, it's a pretty minuscule perk. However, so far this week, and we still have an entire trading day to go, we're looking at a gain of 6.2% percentage points in the VIX. That will be the biggest move higher in the volatility gauge since January. So we have the VIX moving higher. Yes, there's an options expiry, but also, as we were saying, it's the summertime, volumes are low. Historically, this is the period where we see more volatility. So Francine, just a lot of hedging heading into this market right now.
Yeah, I'm so glad you said it's not a percentage change, because otherwise we get like a barrage of like Tom Key emails. Now, joining us to talk about the markets is Mark Hafele, UBS Global Wealth Management Chief Investment Officer. Mark, when you look, good morning, first of all, when you look at equity markets, they're broadly in the red. Is this a start of a correction with conviction, or is this just markets trying to ask themselves what happens next?
Yeah, we would very much put the moves this week and option expiration week in that summer chop category after multiple highs. You know, you do get down days. We forget that.
Yeah, it is. I mean, volumes are very thin. Do you worry about liquidities? I mean, we want to talk about some of the things that you're looking at, but should we spend a little bit more time looking at liquidity into when the Fed could taper?
Well, I think the Fed is going to be in every conversation now for just about forever. So we should continue to talk about the Fed. I think that, the minutes, which are from 3 weeks ago or so, landed at a bad time, right? Because when they were having their debate, everybody felt like things were getting better. The jobs are great, the consumers are spending, and the COVID-19 Delta flare-up maybe wasn't in the same place. So they sounded like Chuck Norris back then, but today, I don't think they're going to strike the same tone in Jackson Hole next week.
But Mark, in a world where the Fed is talking about tapering and a tapering may be imminent, you have these concerns coming out of China and you have the Delta variant. How defensive do you want to be?
Well, we don't think that this is a time to get defensive. I mean, we have diversified portfolio, and for investors who are looking for more defensive aspects of the market, we're looking at things like healthcare. But we still think that the reflation trade is going to work into the fall. That the COVID-19 situation in the United States, we're starting to see a slowdown in the case count raise, and we believe that will turn over just like it has in other places. And therefore, some of the things that are very uncertain this week will start to get a little more certain into the fall.
But on some of those elements of the reflation trade, I know you like energy here, and yet energy has halved its gains for the year. What makes you think that there will be upside in the next 3.5 months?
Well, first, some of this growth and pent-up demand has been slowed, particularly in the United States. But we're looking at things like consumer demand, consumer savings; those things remain very strong. Secondly, in oil, as Asia starts to come back online, that demand will get more of a global picture. And so when we look at supply and demand into the back half of the year, we think that oil can go higher towards 75, and that should help energy.
Okay, so you have those better supply-demand dynamics coming into the picture, maybe a brighter economy. Why then, Mark, are we seeing this huge move in the dollar, taking out its year-to-date highs, trading at the highest since November 2020? What do you make of that?
Well, I think when you talk about the Fed, I think that's where you're seeing this in the dollar. And what's happened is that as the U.S. economy remains strong and the recovery, say, in Asia has been slowed a bit by COVID, and then you have the Fed talking about taper, the natural trade there for many people and for us is to say potential dollar strength into next year, and then pull back a bit on emerging markets, because typically emerging markets are impacted by the dollar.
Mark, let's stay in Asia. I know you and the team are not necessarily bearish on Chinese equities, but still you see more regulation to come. How do you put those two ideas together?
Well, I think for us, when we look at our global portfolios, we're neutral on emerging markets, in part because despite great valuations, China's a significant portion of the EM indices. When we look at Asia as a whole, we would be neutral on an allocation to China versus some of the other markets because we think that China's not going to grow any faster than the rest of Asia at this point. But there's also some values to be had. You know, not everything is under the regulatory gun here. If you look at energy or the green tech space, there's still opportunities in China.
Mark, first of all, I love your note, learning backflips and zero gravity, which kind of really, encapsulates the markets that we've been seeing maybe over the last year or so. But what do you do specifically with Chinese equity exposure right now?
Chinese equity exposure for investors in the region is, we have a neutral weighting to it. I think what we would do is not be adding on the internet side on these areas that are under regulatory scrutiny, not because we don't think there's values there, but we want to wait and get a catalyst because regulatory uncertainty day after day after day makes it very hard to look at things like valuation. The other thing I'd say about China is to invest in this market, you do have to be prepared for these very large sell-offs. We have them every couple of years, and this may be another one of those. So at this time, we're not saying go buy China, keep your allocation at neutral weight.
Mark, thank you so much for the insight. Mark Haefele there, UBS Global Wealth Management Chief Investment Officer. Now, coming up, Angela Merkel in Moscow. It's the German Chancellor's final meeting with Vladimir Putin. We get the latest from Berlin next. We'll talk Afghanistan and Nord Stream 2. This is Bloomberg.
Exceptional Q2. It's time.
The narrative of the day is strong earnings.
Bloomberg has the numbers.
We have about $12 trillion worth of market cap right here.
Find out who's winning.
Tesla beating across the board.
And who's losing.
That's actually pretty rare for Amazon. They typically don't miss on that scale.
And the voices to give you the important news.
Samsung reported another stellar quarter of earnings.
We are very clearly looking with confidence about what's next.
Bloomberg Television, your home for earnings season.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Francine Lacqua and Danny Berger in London. Well, German Chancellor Angela Merkel is heading to Moscow today, just over a month before voters decide on her replacement. She is set to meet with Vladimir Putin before heading to Ukraine over the weekend. Let's get more on this with Bloomberg's Maria Tadeo, who joins us from Berlin. So this will be Merkel's last visit to Russia as chancellor. What is at the top of the agenda, Maria?
Well, you know, this is the final meeting that Angela Merkel will be having with Vladimir Putin, and it is worth just looking at the fact that Angela Merkel has a very unique relationship when it comes to Russia. This is a German chancellor that grew up in Eastern Germany when it was part of the orbit of the Soviet Union. She speaks fluent Russian, and she's dealt with Vladimir Putin on a one-on-one basis for more than a decade. So her profile, it's very unique when it comes to that relationship. In terms of what's on the agenda, we know that we'll talk about the situation in Afghanistan. At this hour, the German government is still flying people out. They have been scrambling to do that and come under pressure in the past few days over the lack of preparedness going into this mission. The other big issue, of course, is energy. It's always a perennial topic between Germany and the Russian Federation. Nord Stream, that is going ahead, but the Germans have told and repeatedly said to the U.S. government that they will compensate Ukraine for potential transit fees that could be lost, and they could also prevent that from becoming a geopolitical tool when it comes to Vladimir Putin. But of course, the implementation remains very much to be seen.
Yeah, Maria, at the same time, I mean, Angela Merkel is really like a master diplomat, right? Not only because she speaks fluent Russian, but she bridges the kind of Asia-Europe divide whilst having pretty strong relationships with Russia. We have elections in September in Germany. Can anyone actually fill her big shoes?
Yeah, well, in terms of the domestic picture right now, Francine, the election and the polls that are coming out actually paint a race that's very tight, that's very open, and is very volatile. When it comes to Armin Laschet, that would be her natural successor from the Christian Democrats. This is a candidate that right now is in meltdown. He continues to lose support on a weekly basis. The CDU is also down in pretty much every poll. And if you look at the numbers that we just got today, by the way, that I'm seeing right now, the CDU does paint a very bleak picture. You know, they're essentially neck and neck with the Social Democrats, and they have lost about 7 points in support in a weekly basis. So I really cannot just describe and really emphasize that this is a party that for 2 weeks is completely getting beaten down in every poll.
Maria, at the same time, the Greens have been calling to bring Afghan refugees into Germany. Is that having any impact on the polling when it comes to them?
Well, you know, it's still very early to say what it's doing on the polls. I guess next week we'll have a better kind of window into whether or not that is playing as a factor. But it is true that they are competing on the progressive side alongside the Social Democrats, kind of saying, you know, we want to help these people. We have an obligation. We have a moral duty to do this. So they're competing on that front. The problem for the Greens is that they're not able to get past the 20%. It does look like to some extent they have peaked, and they're now competing with the Social Democrats and Olaf Scholz. That's the current finance minister. He is flying in polls, and this week almost 40% of poll Germans said that they would consider him the most competent candidate. So he is at this stage the man to watch.
Thank you so much, Maria Tadeo, there in Berlin for us, of course, covering the fact that Angela Merkel is going to meet Vladimir Putin. Now, Venezuela is in default. The country has suffered one of the greatest economic and humanitarian crises in modern history. Now, after 4 years of crippling U.S. sanctions, President Nicolás Maduro is making a public plea aimed directly at President Joe Biden. It's time for a deal. Bloomberg's Eric Schatzker travels inside Venezuela and sits down with the power brokers that will decide the country's future.
Venezuela's decline is a story of destructive domestic politics and failed foreign intervention. It started with Hugo Chavez, the self-styled revolutionary, and it continues today with his chosen successor, President Nicolás Maduro. Venezuela used to be the biggest oil exporter to the United States, bigger than Saudi Arabia. But since 2019, U.S. sanctions have kept the country from selling most of its crude and forced it into default. Production that peaked at almost 3.5 million barrels a day shrank to just 310,000, not enough to meet domestic demand. Across the country, drivers line up for hours, sometimes days, to fill up with gas.
It's a disaster, a total disaster. Losing a day, a whole day of work, of rest, an entire day.
Even Maduro, whose authoritarian regime has withstood U.S. efforts to oust him, is desperate for a deal.
If Venezuela can produce oil and sell it, can produce and sell its gold, can produce and sell its bauxite, can't produce iron, etc., etc., and can't earn a revenue in the international market, how is it supposed to pay the holders of Venezuelan bonds? This world has to change. This situation has to change.
For the first time in years, there's some reason for optimism. The U.S. remains deeply concerned about the ongoing crisis in Venezuela, and the Biden administration has set conditions for meaningful progress, starting with electoral conditions that abide by international standards for democracy. If the regional elections in November 2021 are considered free and fair enough, the Biden administration might relieve some of the pressure on the Venezuelan economy and its people. For Maduro, it's a tricky balancing act.
I would say to President Joe Biden, stop. From the White House, from the State Department, stop the demonization of Venezuela, the demonization of the Bolivarian Revolution, the demonization of President Nicolas Maduro. Hopefully we can find paths of closeness, of respect, paths of mutual benefit, and paths that allow us to normalize relations between the United States and Venezuela.
Bloomberg's Eric Schatzker there with Venezuelan President Nicolas Maduro. And you can catch the full Bloomberg special Inside Venezuela. That's tonight, 7 p.m. in New York, and that's midnight in London. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix with Danny Berger in London. Now we're joined by Tom Keene, co-anchor of Bloomberg Surveillance. Tom, when you look at some of the market moves out there, I think all of this anxiousness that we're seeing, the Delta variant, the regulation in China, will probably come at the forefront as we await Jackson Hole. So Jackson Hole really taking a lot more importance all of a sudden.
Well, I think it's creeping up on us. Of course, the chairman saying he's going to be virtual with his speech to Jackson Hole. That speaks to the Delta variant. What I speak to is the similarity of Wednesday, Thursday, and Friday, Francine. Real correlations in the market. Futures at -15. The yield space, the dollar stronger, I think, is of note. The other thing of note is the wall of liquidity. I don't know what to make of this, folks. I'm agnostic, but there's a gloom crew that feels overnight repo expanding out over $1 trillion is a big deal. And there's another crew led by Ira Jersey of Bloomberg Intelligence who say, so what? Here's the so what. Francine, it's a moonshot today to $1.1 trillion of trust money overnight in the overnight repo market.
Yeah, you know what I actually picked up, and I thought of you as soon as I saw it. The Swiss franc is actually also closing in on the 106 handle against the euro, Tom, taking it to levels we haven't seen this year. And, you know, it's one of the key pairs to watch for risk sentiment.
Yeah, absolutely. I think you're dead on euro Swiss, folks. Francine just assumes because she's over there that it's euro Swiss and not dollar Swiss, but euro Swiss shows strong Swiss franc.
That's what the pros look at.
Of Francine are out in force.
Well, speaking of dollar, Fran's not going to mention it. I certainly will. There's a really interesting argument, Tom, from Ben Emmons of Medley Advisors saying that the dollar is the new 10-year yield, that if we're having this economic anxiety, it shows through in the dollar. I mean, what do we make of this strength? What are you watching when it comes to King Dollar that continues to move ever higher?
Well, I don't know if it's King Dollar. Yeah, it's stronger, but it really hasn't broken out. Maybe King Dollar waits for a bit of time. Ben Emmons writes very thoughtful notes. And to me, what's important there, that observation of the 10-year yield, is that dollar correlates everything out there, just not the 10-year yield. Sometimes that's not true. But right now, I would say, Francine, it's really, really true. The dollar strength we've seen grudging into the range, not out of the range to new strong dollars. I haven't even looked at euro today, 116.76. Francine, can you imagine a 115 euro?
I mean, at this point, we probably can. But, Tom, I would say, given, you know, dollar strength, go out there and buy more Gucci's because we're seeing a lot of these luxury stocks.
Well, they got
really
hammered.
rattled.
Yeah, they got hammered.
They got hammered. And this is just because China's trying to reduce this wealth disparity. Tom Keene, of course, co-anchor of Bloomberg Surveillance. He'll be on very shortly also with our Kaylee Lines. Now, this is what else we're watching. Danny, you're looking at options.
Always forever looking at options, Francine. But today especially because we do have a big options expiry. And I think this is important because we were talking earlier about how the VIX has started to tick higher. Now, there's a lot of reasons underlying this, but one of the reasons that the pros point to is because of this options expiry. Some weird things happen around it. Sometimes people need to hedge depending on whether they roll over their positions or not. So with all that being said, when we look at the market option today, we need to do that through the lens of knowing that there is an option expiry. And sometimes, Francine, that just means weird things happen on these Fridays.
Yeah, I love the fact that you're looking. I mean, I'm looking at options, but they're more like lunch options.
I like those too.
Yeah, this is what else I'm looking at. So it's basically a junior banker pay. We've been talking about it all week. We understand that Goldman Sachs could actually increase some of their salary increases to a wider range of junior bankers. So Goldman Sachs, according to FN, would, for example, increase the pay rises to trading, the asset management. We had a great chart looking at the base pay for junior bankers. Bank of America, JP Morgan, Barclays, Citigroup, Deutsche, Morgan Stanley, around the $100,000 mark a year. And then Goldman Sachs, Jefferies, and Evercore, I think, are actually much higher than that.
Yeah, and of course, Schwab just yesterday also boosting their staff pay by about 5%. So whether it's the big bulge bracket banks or whether it's the broker dealers and more retail, they're giving raises too, Francine.
Yep. Now, more Bloomberg Surveillance is coming up ahead. We'll hear from Vincent Reinhardt, Mellon Investments chief economist, former Morgan Stanley chief U.S. economist, and former Fed official, amongst others. I know a good conversation on dollar is shortly. This is Bloomberg.
You can now fly into the UK from the United States. What about some reciprocity?
No, so the opening up by the UK government was terrific. We saw, in fact, the day that was announced, we saw our daily new bookings triple between JFK and Heathrow. So that was great. And as a US-based carrier, honestly, most of what we're going to sell is going to be in the US. So that was great for JetBlue. The US government should open up. There is no reason not to. You know, you can fly from countries that have much higher COVID infection rates, but you can't come from countries in Europe where infection rates are much lower. That is not a risk-based approach. When it's going to open up, I couldn't tell you. It's something that we and the other airlines in the US continue a dialogue on with the administration.
By Christmas?
I mean, hopefully even sooner than that. But of course, I don't really know. It's really hard to predict how they're thinking about it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
There's an unprecedented amount of liquidity everywhere. A lot of it seems to be kind of on the sidelines.
The consumer is still seeing a strong economy. They just are a little bit less excited to participate in it.
It's likely we return back to the growth levels that we saw at the end of 2019, early 2020. So prior to the pandemic.
It's not so much about the inflation, in my view. It's about what the Fed is going to do about it.
There's definitely signs that they need to be tapering and they need to get out of this QE business.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, a simulcast, a Friday simulcast. Thrilled that you're with us on radio, on television. Jonathan Farrow on extended sabbatical now in Crete. We're thrilled that he's in Crete. I haven't heard yet, Lisa, if he's landed in Crete. Kaylee Lines helping out this morning. Futures in -17, Dow futures -129. And for those on radio, you are advantaged. Because one of these blues doesn't look like the other blues.
You know it, Tom. You can't criticize us right off the bat for what we're wearing.
I'm in blue. Kaylee's in blue. Lisa's in blue. It's a Blue Friday, folks. We'll leave it there and move on. I mean, it's...
Take it up with wardrobe, Tom.
Looks like the San Jose Sharks on a bad day. Anyways, here we are. Lisa, it's been an extraordinary week. Lisa, to me, it's been a week of 4 Fridays. That's how long this week has been.
I know. Maybe that says more about how we're doing at this point in the summer, although I think a lot of people are feeling the same. Isn't over yet. The pandemic sort of coming back, and I think that the psychological hit, in addition to some of the pressures on the travel and leisure sector, and frankly on the commodity sector, sending a new tone into this market, Tom. I think that is really the way that I take away from this week of Fridays.
Off the gloom yesterday, we were doing the gloom show yesterday. The market's catching a bid, and really some real sustained level here, Lisa. It was buying the dip yesterday, wasn't it?
If you look under the surface, though, yes, it was. If you look under the surface, it's been fascinating. There have been shares that have absolutely gotten crushed, including Amazon, which is interesting. And then you have other shares that have really held in nicely and have done, back to this sort of stay-at-home kind of economy and big tech dominance. It really raises a question, Tom. Are we seeing a correction just in such a nuanced way and sector by sector that we don't even notice?
And yet an extraordinary story in Kabul and also in Washington as well, and with the allies and Kaylee Lines. I mean, we're all watching tick by tick what we see with this horrific ongoing story.
Yeah, we of course are, Tom. I'm not sure that the market, frankly, frankly, gives much credence to what is happening in Afghanistan. As far as geopolitical risk, that doesn't seem to be one of the primary concerns that is dragging on sentiment. That seems much more to be about the Delta variant, about the possibility of a Fed taper coming in the next 3 months of the year. And then, of course, you also have China, and perhaps that is idiosyncratic, Tom, in terms of the kind of technology crackdown taking shape there, but the growth story feeds into a lot of the concerns throughout the rest of the world.
And the growth story, again, off China, John Farrow, I thought was really good about it, focusing on that story. Can China generate 6% GDP? Futures negative 18, Dow futures negative 143. The VIX is of important note. The VIX out to a 23.07. In the bond space, as they say, and this is critical, on the board, 123.16 is a lower yield in by a full basis point, and that's a grinding oomph down, and you see it in curve flattening to a solid 101 basis points. Move the decimal point 2 places, 1.01 percentage points between the 10-year and the 2-year. Oil southish again. I mean, what do I do with oil, Lisa? Tell me what to do with oil.
Stockpile it in your living room, clearly. I mean, that was clearly a winning trade for me. I will say that there is a new tone to markets, as we were talking about earlier. And I would argue that perhaps the bond market has been out front. People saying that it's the Fed. John actually raising the issue that don't blame the Fed, because in this case, probably the Delta variant and some of the supply chain disruptions having more to do with the sort of bearishness that we're seeing come into particularly the bond market, but also the commodity space. Let's just get you through what we're looking at today. It is a snoozy Friday. If you want to go ahead and leave early to go on vacation, I won't tell you.
I'm on that. Okay, thank you.
11 a.m. The Dallas Fed President Robert Kaplan is ready to speak. He has taken a more hawkish tone, if that exists, on the Federal Reserve in terms of when to taper assets. To me, I'm going to be very interested to see what Fed Chair Powell says next week regarding the inflationary pressures from supply chain disruptions paired with a slowdown. How does the Fed deal with this when some people are saying that these inflationary pressures are more than just transitory and have some sort of longer lasting impulse, especially as these supply chain disruptions last for longer? Today, you were speaking, Tom, about the Afghanistan situation. German Chancellor Angela Merkel is meeting with Russian President Vladimir Putin today. Among the discussions as Angela Merkel wraps up her tenure as Chancellor of Germany will be Afghanistan. Russia is one of the only countries to maintain its embassy in Kabul. Question is how much they will try to position and use that to their tactical advantage. They typically have had an okay relationship. What will she sort of direct him or say, and how will she frame it after the conference? And at 1 p.m., Baker Hughes U.S. rig count. I'm interested to see.
I love this. Why do you like this? Explain to our audience on radio and TV the so what of the Baker Hughes rig count.
One of the interesting things, and actually if you extend this chart out a lot earlier, you could see that the number of rigs that were in operation in the U.S. plunged in the direct aftermath of the pandemic. They have come up, but they have not recovered. They have come up very slowly. We have seen discipline in the shale patch, which raises a question of whether we've seen peak shale, Tom.
Let's get right to it, and we are thrilled to start strong on Friday with Dennis Gartman. He's the retired editor of the Gartman newsletter, still writing the Gartman newsletter, and it is a jewel today in his retirement, which harkens back to Saigon. That cartoon, Dennis Gartman, in your morning letter is painful.
It is very painful. The relationship or the similarities between what happened in 1975 in Saigon and what is happening now in Afghanistan are frightening for those of us who were around back in the 1970s and remember how that looked. It is dismaying to see the United States position in the world having been diminished as badly as it has been. This is a very disturbing circumstance that's prevailed, and this is a long, long week, and we have a long time ahead of us to worry about the loss of perspective here in the United States.
Dennis, Lisa wants to jump in, but I've got your newsletter is a jewel on how prices are priced at the margin. Almost there's a marginal pricing of the margin at the margin. Explain that.
Well, first of all, in all markets, I've always maintained that price is made at the margin. When the last 2% of buyers become sellers, prices go down. When the last 2% of sellers become buyers, prices tend to go up. Price is made at the margin. And what bothered me this time was looking at the level of margin being used in the stock markets that these days had been going up for 15 consecutive months, coextensive with a bull market in stock prices. But there's always been a very leading indicator that the use of margin has led the market to the downside, has led the market to the upside. And now for the first time in 15 months in July, the use of margin, and I've maintained that that's where wise and sophisticated smart money has been leaving the market since July. It's very disconcerting. That tends to lead the stock market higher or lower by several months, 2 or 3 or 4 months, sometimes a bit longer. But when you start to see margin usage declining, you have to be careful about the stock market itself. It is one of the better leading stock market indicators that I have learned to watch over the course of my nearly 50 years of being in the markets.
Dennis, what does this mean in terms of some sort of drawdown, considering that a drawdown these days is perhaps maybe a 0.5 percentage point decline?
Well, I think there's more going on here than a 0.5 point decline. Take a look at the broader market. We tend to pay too much attention to the Dow, too much attention to the S&P, way too much attention to the NASDAQ, and nobody's paying attention to the broad Russell index, which has not made a new high now in several months, has broken its upward sloping trend line several weeks ago that goes back into March of last year. Something is happening in the broad market that doesn't seem to be taking place publicly. The public is still involved in the markets. It still sees the Dow making new highs. It still sees the S&P and the NASDAQ making new highs. And you brought up the fact that you have to pay attention to what happened in Amazon. Amazon, for the technicians, gapped lower dramatically almost 10 days ago and has not come close to bouncing since then at all. And Amazon had been one of the leaders to the upside. When the generals get taken out and get shot, you have to be worried about what the sergeants and corporals and privates are going to be doing.
Yeah, and I look at things like the AAII sentiment survey that we got this week, the bears out exceeding the bulls for the first time this year. Have we started to see a real shift in sentiment this week?
I think you have. I think that that's starting to take place. I think there's no question about it. People talking about the inevitable tapering of the Fed's expansionary policies, that's going to happen, whether it happens in October, November, December, January. Certainly that's going to happen. And I've maintained all along that the great bull market that we've gone through has been almost solely predicated upon the expansionary policies, not just by the Fed, but by the Bank of Canada, the Bank of England, the ECB, the Bank of Japan. And the Fed is clearly, at some time in the next month, 2 months, 3 months, 4 months, going to start the process of tapering. Whenever that happens, that's less money coming into the market, and money will leave the stock market and go into the expanding economic circumstances. Clearly, the economy is doing well, and that's what happens at turning points. Stocks go up before the economy turns higher. Stocks go down before the economy turns lower. Stocks are going to start moving lower, and the economy will continue to not boom, but be really quite expansive, quite strong.
Dennis Gartman, thank you so much. Too short a visit this morning to get us started on this Friday. Chairman of the University of Akron's Endowment Fund. John Deere out earnings. Deere is followed because it's John Deere. Deere's also followed because in the old Asian days, it was it was part of the CFA curricula. So everybody in the racket follows it with great sentiment as well. Lisa, the sentiment here is optimistic. They've got robust conditions out there.
Yeah, well, right now what you're seeing, and this goes into the food inflation story that we've been talking about, that you have seen certain disruptions and the demand increase, and so the prices increase. People need to plant more, and you get the equipment, particularly for farming, which Deere specializes in. It just highlights, though, to me, how markets respond to upward revisions, to upward forecasts, because you can see the shares actually are lower in pre-market trading time.
And Kayla, you won't understand this being an urban girl, but a girl out in Fargo, North Dakota, I mean, the idea here is you've got to upgrade to the...
Okay, guys, it's time to play stop on profit for euro. I'm going to play stop on profit at 116.75. If you follow my trades, please play stop on profit at 116.75. Just right here. Okay, whatever happened, you will not end up in loss, so you will close your trade in profit. Okay, guys, stay safe.
She actually read the press release?
She put blue on, and she came on set. That is what we do here at Bloomberg
Futures
Surveillance.
in negative 19. Good morning.
With the First Word News, I'm Laura Wright. In Afghanistan, more scenes of chaos at Kabul airport. The US is rushing to evacuate people, but Taliban forces at checkpoints around the airport are making it tough for people to enter. That's raising concerns that citizens will be prevented from leaving. Meanwhile, the White House says the US evacuated almost 3,000 people yesterday. In Australia, Sydney's 2-month-long lockdown will be extended until at least the end of September. The coronavirus's Delta variant outbreak has gotten worse in the country's biggest city. Meanwhile, New Zealand has linked Sydney's outbreak to at least 3 local cases. So the country's 3-day lockdown that was due to end today has been extended until at least Tuesday. Coronavirus patients are dying at US hospitals at rates not seen since February. Those numbers could get worse as intensive care units overflow in parts of the South. The number of people dying with confirmed or suspected COVID rose to a 7-day average of 1,016 on Wednesday. It will be the Biden administration's most high-profile trip to Asia yet. Vice President Kamala Harris will look to bolster economic and military cooperation in China's backyard. She'll visit Singapore and Vietnam starting this weekend. Leaders there will look to Harris to reassure them of America's role as a major trading partner. Meanwhile, Harris will be able to raise her international profile. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Laura Wright. This is Bloomberg.
Sem se apresentar, as escolas estão começando a reabrir, os teatros não vão reabrir tão cedo. Aí a gente teve a ideia, no melhor estilo Minuto Nascimento, vamos levar a música aonde o povo está.
Minha missão hoje é fazer as pessoas sorrirem, cara. Sorrirem, olharem da janela, verem uma coisa inusitada, ficarem felizes, mandarem para os amigos e, enfim, curtirem um momento diferente, mesmo dentro de casa.
This is Venezuela, a country that has suffered one of the greatest economic and humanitarian crises in modern history. Today, it appears Nicolás Maduro and his government are prepared to negotiate an agreement that might end U.S. sanctions and pave the way for free and fair elections.
Hopefully, we can find paths of closeness, of respect.
Join Bloomberg Television for a special report, Inside Venezuela, Friday at 7.
We can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
The U.S. military footprint in Kabul is now more than 5,200 total troops on the ground. Kabul airport remains secure and open for flight operations. Since the start of evacuation operations on August 14th, we have airlifted approximately 7,000 total evacuees.
The general from Brigham Young University, General Taylor, is a different general with massive on-the-ground experience in Afghanistan. He was the guy at West Point who taught you jujitsu and these other physiology things, you know, wrestling on the floors of the mats at West Point. He is a distinguished member of our military. Just as distinguished, Anne-Marie Horton joins us now with Bloomberg in Washington. Anne-Marie, how's the Pentagon doing this morning?
Well, they're getting a lot of questions, Tom. I think the Pentagon is just trying to work through the process of, they said that there's going to be 6,000 troops on the ground. You heard from Admiral Kirby there that it's actually 5,200, so still more troops coming in. But they are getting people out, not at the maximum level, though, that they are capable of. So they are trying to reach up to that level. I think the other problem that they're dealing with, and this is actually more of the State Department, and Representative Seth Moulton really laid into the administration on this, is actually less so the military, but those diplomats that need to be on the ground to make sure that they can go through people's paperwork before they actually get on the flights.
So where are we in terms of the paperwork? I know that that was part of the issue, that they said that they couldn't bring people over because they were processing paperwork. What's the kink in the system now?
Well, from what Representative Moulton says is that they wanted to double it. They had 20 people on the ground. He says that now they are doubling that. So he says that would make it, 40? But he is calling it, let's mind you, this is an individual who is a Democrat. He also is a former Marine serving tours in Iraq. He says that this is one of the greatest foreign policy errors. We will get an update today, though. The President of the United States will be briefing the American people.
Know that. Yeah.
Yes, the President of the United States is going to be giving a speech in the East Room alongside Vice President Kamala Harris before she jets off to Asia about Afghanistan. So we will know where we are from the President of the United States, because the situation on the ground is incredibly fluid. If you look at the reports, and you can see there the video coming from Kabul.
Yeah, although Anne-Marie, his tone has been pretty consistent. I mean, we've heard from him several times already in both the ABC interview as well as in his press conference on Monday, and his tone is defiant, saying that we did it the best that we could. We had to get out of there. We withdrew under the parameters that we understood. What more could he potentially say today when he gives a new address?
We have to wait and see. We know that the president will at least update the American people on their assessment of how many Americans they have gotten out, as well as many of those SIV Afghan applicants, those special immigration visas, and also what comes next. I think the deadline is something to really consider. The August 31st deadline is important because that is what the United States has negotiated with the Taliban. You have the U.S. having security control of the actual capital, but you have security checkpoints of the Taliban set up around the capital, around the airport, excuse me. So what happens on August 31st if they do not have their evacuation program underway and completed? This is where things can get potentially precarious and risky, as Jake Sullivan, the National Security Advisor, had said to NBC.
Is this solely for the executive branch of government to deal with, Anne-Marie? I know that some House members are going to get a declassified briefing an unclassified briefing on Afghanistan today. They are, of course, coming back next week to deal with the reconciliation vote. Are we going to see any action from Congress on Afghanistan?
Well, the Congress right now just wants answers. You see immense pressure, bipartisan pressure on this administration for answers on how we got to this place in this evacuation withdrawal. There's going to be a classified briefing on Monday with House ranking members, and then on Friday with all House members on exactly what went on in Afghanistan. So there is a lot of pressure on this administration to have answers, and really as well from the State Department, the Wall Street Journal reporting that there was a cable sent July 13th talking about the deterioration of what is going on in Kabul, and this is what Congress wants answers on.
Anne Marie, an unfair question, but I'm going to go with it anyways. In all your reading and context, do we have a clue what's going on in Herat, Kandahar, or up to the north?
Well, what we do know, Tom, is that there's not a U.S. presence there, right? And the Taliban has control. So you have a lot of individuals who are feeling that they're a bit left-footed, back-footed on the situation, and many people in hiding. It's very difficult for these people to get out of the country because Herat, for instance, is very close, say, to Iran or Turkmenistan. It would be incredibly difficult for those individuals that want to get out to make their way to Kabul. But you can't get out through Iran right now, and you can't get out through Turkmenistan right now because these borders are locked by the Taliban.
An interesting day, Anne Marie, with a long, long Friday ahead of her as the president will, I believe, address the nation. Anne Marie Horton, thank you so much. Back to the markets, guys. And Lisa, I think you've emphasized it twice here this morning about commodities link in. You wonder, Ed Morris looks smart at Citigroup, does he, on calling for lower oil prices?
Yeah, and if we remember back a couple of months, people were calling for perhaps $100 a barrel of oil, and how much that picture has changed. And we've been talking about how this really has come on the demand side, not the supply side. The idea that this Delta variant has changed the dynamic, and whether it's just a pause or whether it's a shift in the trajectory of the recovery remains to be seen.
Kaylee, Lisa and I darken the door about 5:52 a.m. You get in a little earlier. What do you observe on the Bloomberg terminal in the markets?
Well, it's interesting. The handover has been so negative from Asia, Tom. It was true yesterday, and stocks in the U.S. were able to withstand it. And once again, I'm seeing a similar pattern when I walk in the door at 2:45 a.m. Eastern time, that futures are lower with it deeply red in Asia. And futures were...
Okay, traders, position closed on euro, as you can see. We have 200 pounds in profit. Well done. Okay, in your case, depends how much you wanted to invest. If you want to find out more, you need to go to company.co.uk and you need to get a strategy. Okay, guys, I'll speak to you later.
From the shores of Jackson Hole with Michael McKee.
Really?
And the chairman will be virtual.
It's land. Yeah. Well, this is going to be, I'm just still trying to get my head around the geography that you imagine we're heading to in the mountains of the ocean there in the Grand Tetons.
There's a big swamp, seriously, off the deck. When the central bank elite go out and wave to the elk and do all that, Lisa, it's a huge swamp over a good mile and a half with all sorts of animals like in there. There's trout that Ken Pruitt used to fly fish out there. The late Ken Pruitt.
Exclusive. You look out there and you see all the animals. One person who will be disappointing the moose and the elk will be Jay Powell, as you said, because he's going to be staying in Washington, D.C. Others as well, including Vince Reinhardt, who's coming up, the economist from BNY Mellon. He also is going to forego a visit because of the Delta variant, which just highlights kind of where we are in this pandemic. But we'll be there and we'll be waving to the elk. Maybe nobody else.
A different conference. Michael McKee lining up important conversations with sundry Federal Reserve officials, but it's going to be good to talk to Vince Reinhardt here in a moment. On bonds, on the lack of coupon, Marty Patel of Wells Fargo will join us here in a moment. Please stay with us on radio and television. This is Bloomberg, the VIX 23.03.
Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could tank the entire market? There's upward pressure on wages.
Analysis.